Hello. Hello. Can't believe I just come in here and automatically push the shut off button on my computer. Stupid. Yeah, I'd say so. That's God. Jim, you moron. Power outage. Can't believe I did that. The tariffs pissed me off, man. I didn't want to hear it. See if my setup's still here. Jeez. Oh, laugh at yourself, you idiot. Oh, YouTube. What am I going to do with myself?
Into the whole thing?
Woo! That was smart. Well, laugh at yourself, you idiot. Good morning, retail traders. I can't believe I did that. Everything's up, so I didn't screw that up. How many more minutes? 14 more minutes left.
Apparently, China was not doing as well as we.
Hey, baby.
Wrote there. I guess maybe just the calculus is not adding up for investors looking at the bottom line versus the top line, because the top line seems pretty good for 10 minutes. So gotta say,
Jenny, I love you.
The strength of some of our online businesses here, 25% for e-commerce right now is really good. That's definitely a disruptor type of growth rate. So I'm a little surprised that it's down.
So right now, I also think that there's this somewhat pessimism related to the fact that Temu has been facing now pretty substantial scrutiny here in the U.S. And so with right now, I think that that's still being a pretty major overhang. And I will say, looking at some of its competition, AlibabaJD.com, we know that right now attracting customers with low prices sure is a way to drive this focus. But Alibaba also did post its revenue growth since late 2020.
We're now at support.
It makes me say, hey, wait a second, if that's what's being criticized about this report.
This thing says it's muted.
Is phenomenal.
Yeah. Okay. So there's
She said I was phenomenal.
For sure.
Right.
A lot of the charts look a lot better. I think there's probably a lot of people who
it's phony
were
stuff.
Playing.
It didn't happen.
You're phenomenal, James. So we pulled back to our first support right now. Do I make myself perfectly clear? Low support, Yoko, if you're listening. Yeah, I'm picking on you. Did anybody miss me yesterday? Besides Mike? Yoko, did you miss me yesterday? Good morning, punk. I know I'm pronouncing that wrong. Good morning, Chris, Holder. I am Sheba, Magnificent, and Michelle, and Rob, and Ricky. Well, Jimmy comes in and he shuts off his computer. What kind of moron would do that? Do I have time to make me a... Should I have a hot chocolate or a coffee? I think I'm in the mood for them dang hot chocolate, man. I can suck that stuff down fast. So I'm going to make this one real hot. I can't do nothing right. Dang, Jenny, you look hot today. Don't she look hot? I don't know what to exactly call her today, but man, hot's going to be the word. I thought she was kind of chubby, but she don't look too chubby there. Jenny, I'm saying you weigh probably about 135, maybe 140. And Oliver, get your eyes off her tits. Well, the Dow's down today. I'm feeling bullish today. We got the 200 also on the 1 hour at 561.30. So somewhere between 559.87 is my guess. Now we can go lower and create an inverse head and shoulders. So that's, we have to hold 559.87 to stay bullish. So we'll have certainty on April the 2nd. I wonder if Trump's going to lose any support because of his... I always thought it was about the economy, stupid. That's the way I look at things. But I didn't like what happened the last 4 years either, so... It's not my kind of America. We're at support on Randy. Where are you today? Oh, I got roof calls coming in today. Old MacDonald had a farm, me-I-oh. I want Jenny back on there. I can't think straight. So Baba's pulled back. China. Looks to me like we're at, we broke support. Underlying belly. What the hell is going on here? What's going on? Oh shit. Might have to reboot. No, we're at support. Baba might be good to watch. Jim, put up your platforms. Seems like you don't do that quite often enough. Yeah, I went to the mall yesterday. Walked around, looked at shoes. Flirted with a couple girls, and the coach Coach's Purse store. And then I was going to look for something to eat there, and I didn't like what they were serving, so I went to Palmala, whatever that's called, for a Mexican fish taco. Then I came back home and electricity was still off, and so I took a 2-hour nap. And then I woke up and I was trying to figure out what I was going to do in the dark. And so I started putting on my shoes, and I was going to go back out again, maybe do a job or something. And then, boom, the lights come on. 7 hours without electricity. I remember them times where we didn't have computers and the internet and cell phones. We played outside, and I wrote a song about that. I'm surprised I didn't try to sell it. It could have probably been a hit. We had bicycles and fishing rods and skateboards and going to the crawdad hole and getting crawdads to go fishing with, soft shell, digging worms, playing kickball, neighborhood kickball games. Everybody get out after dinner and get about an hour or two in exercise and go to bed. Shoot our slingshots at go to keg parties. As I started getting a little bit older, still didn't have no cell phones or anything like that when I was in high school. Had a lot of fun. Moved out when I was a senior in high school. We had a big old house. We had parties every Friday and Saturday night. About 3 or 4 16-gallon kegs. Then disco came, and I got involved in disco and would go to the disco clubs. Everybody laughed at me, but I knew where the girls were. They were out getting drunk, and I was out at disco clubs. Dancing the night away. Oh, dancing, dance the night away. Mom would say, "Where you going, son?" I'd say, "I'm going fishing, Mom." "Well, you look awful slick to be fishing." "What else are you doing, Jim?" And I'd answer a question, and by the time she come around the third question, I'd say, "Does a chicken have lips?" She knew that she couldn't ask 3 questions. She could only ask 2 and get an answer, so they had to be the right ones. And still they would. "Where are you going, Jim?" "Fishing." "In your disco shoes? In your flare bottom blue jeans and that beautiful silk shirt?" "No, Mom, I'm going fishing. I'm going to fish for some chicks." I'm liking how the Dow's opening up this morning. Looks like we're going to have some fun. I'll go get my water ready. I'll be right back.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network. No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device.
I still got a trade or two in when I was out.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's a Carl's Way.
I just don't like trading on my phone.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I let them manage some investments for me too.
Let's move on, shall we? No can do.
No can do.
Where are you going?
Schwab.
Schwab, a modern approach to wealth management.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our
Today's slipper or polos.
So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Kind of personal question right there. So I'm looking at the SPY. The 560 stick strike. They're buying the 567, but I like the 566. Right here at 117, 115. Get ready, baby. Tariffs. You know what? I don't care about your tariffs. $116 looks good to me, baby. It's March the 20th. At 114, the strike is 566, 1.14. He got his first trade in this morning. He's going around the corner here. Oh, what's that you doing on there? Oh, 127, 128. Take your profit. 131. I'll take it right here. I'm out. Damn, that was fast. I don't know how you do it, Jim, but Yoko. Yes, I left 5 on the table. $143. Santa Claus is coming to town. I'll take him at 150. They're done. I'm out. 150. Well, I'm off to the beach. I'll catch you people later, man. Woo! Dashing through the snow, making bobos bright. 174. Damn. Can't complain about that.
From an international standpoint, it seems like the longer term trends to the upside. I think we're just kind of seeing maybe a little bit of a material pullback.
Okay, we now hit the 200.
Going back to that kind of yield chart though, real quick, it all depends on the market narrative and the market where the market thinks we are at when it comes to the cycle. Earlier last year, what did we see? Higher inflation numbers. You see yields kind of moving to the upside here because of that particular risk. Equity markets moved to the downside. We got towards the middle of the year, August, September. We saw this pivot basically back in September.
That's
and
when they
what
cut.
was the case?
That's the bottom.
Exactly.
Cotton was the bottom in the 10-year yield.
Sometimes I don't get off on how CNBC talks about a stock that's going in a downtrend. Because they say, like, they always say it's going down from the top, but they never say about the 300% that we're up on them. Or the 400% we're up on them. You know, we're down 30% or 20% from the top, and they're worried and crying out. But actually, the stock's up like 250% from the bottom. Or they say at the beginning of the year, when actually, if you look for a whole 52-week period, it could be up 300%. So I think the way they look at things and the way I see things are totally in different realms. I mean, so I'm getting where I'm liking Tesla right here. I still would love to see it down at $200, but
below this wedge on the longer term time frame. And so overall, I think we just need to have that follow through day. If we don't have that follow through day, Oliver, do we say that over the last couple of days, do we have a double top pattern and then break lower?
Apple.
I feel like there's actually a lot
you
of
know, we had a
support
double
here.
bottom
We
at
have a channel
124,
that was, we were consolidating
and
for
we're
a
at
little bit.
214, so
200
things still
on the 15.
overpriced, in my
Key
opinion.
area support, 5600s of really key area support as well. So if we do break below, I think it's going to be a convincing break below. I don't think it's going to be something that's very low volume that really tries.
You're
to,
pumping NVIDIA too.
Might try to look below and see a failure. I think this was at a more.
So NVIDIA's another one, $10.
I do want to bring up this one more chart.
We're still up
real quick,
1,000%.
Kind of important here. E-mini S&P longer term time frame, 10-year weekly chart, where are we at? And that's the biggest question right now that can make you a little bit more of a 50-50 type of trader here, or have a little bit of indecision. Are we at the October type of cycle? Now we have to just keep in mind, we already had a pullback, we had a consolidation. October, we had a 10%, 13% pullback here, and then we were able to bounce off that 50-day moving average, or 50-week moving average and move higher, which is what we are testing right now. Do we see a breakdown of the 50-week moving average? And does it match
Amazon
January 2022 price action, or do we match the October?
Could be a buy at 180, a little bit below that at 175, and still be overbought.
Trying to hinge higher here, but it has broken the upper end trend line. That RSI is actually very telling. We start to continue to see a little bit more of a movement of to the upside, or stalling and selling pressure. That could be a little bit of a buying opportunity here. So this is a make or break moment for the market. I believe right at these levels. And if not, I think we kind of break down and fail. Traditionally, we would see a bounce here at least for a week or 2 weeks before we truly flush to the downside. If this is the top of a bull market going into a bear market or a correction, or a sustainable correction phase.
Understood.
No, this would have been a deal. SPX.
Appreciate it.
That would have been a great
looking
trade
big,
right there
long picture
this
for us
morning.
for some really good context there.
I'd have jumped on that.
In October 23, that was a nice time to get in. But we got a lot of things that we got to figure out.
I'm gonna go get my chocolate and I'll be right back.
Talking some stocks. Love that chart from KG. But let's go back in. Let's zoom back into some companies here. Diana,
We got a megaphone
Below,
here.
which is actually decent.
It is.
You know, after a rough year.
It is, and I mean, because you remember there were worries around Five Below because of the concern about the consumer base that Five Below has. But one, the street likes its forecast, and also like how it performed on the previous quarter and some of the adjustments that they're going to make as a result of tariffs and their exposure to
We could
that.
see 56.90 today.
This was 348. That beat expectations. Revenue actually beat expectations at 1.39 billion, so close to 1.4 billion there. In terms of same-store sales, that was actually down 3%, but that was better than expected, as you know. They are
Here's your
gonna make
pivot
some price
point.
adjustments because of the tariffs. They're going to raise some prices on some of the items that were
Oh,
previously
shut up.
priced below $5, because we know that's a big part of how they operate. And they also have, the Five Beyond period, which before some consumers had pushed back on that. But obviously they see the
God,
need
you're loud
to
today.
make this adjustment. They are still going to
So Five had a big old breakout.
So it seems like it's going to be a balancing act, but how they adjust.
And the street was bashing them down, because a lot of their goods are from China.
Keep in mind, about 60%
But
of their
sales were
goods
up.
come from China. Their cost of their goods come from China, so they have some exposure there. They're planning to do some diversification.
Who gives a crap about
negotiations
tariffs, young
on
lady?
their, earnings call. They're doing vendor negotiations, mitigation. They said those are probably the two biggest strategies going to take. They're going to also diversify some of their product sourcing. They've talked about sourcing more from India, so we'll expect to see some adjustment in their strategy in terms of how they source their goods. They've also, as you know, already scaled back some expansion plans.
Yeah, this one got whipped
That
up
helps
pretty
as well.
bad.
In terms of their forecast, they're forecasting for the full year revenue to come in between 4.21 and 4.33 billion. The midpoint slightly above expectations here for that.
I don't want to hear about the street because they're never right. Whatever, I don't know where you get your figures from when you say the street. Your analyst.
Street is looking for Oliver.
All right, look at that. Five below. With a 5% pop. $65.
Above the water right now. Yeah.
Yeah, that's nice to see. Fun store. Good heart in that store.
I like that store. It's got some cute stuff in there. I mean, and it is knickknacks, and it doesn't feel like, you know how sometimes some of those discount stores can feel a little depressing.
Yes.
I'm just being real with you.
Yeah.
You know, because obviously their consumer base is usually because of either, the price point that it needs. But then there are some people that, as you know, will just go in there for anything, like whatever it's, if it's a pan, a ball, knick-knack, as you mentioned. So it sounds like they're making some adjustments that will help them, do well even in the face of tariffs, and if the consumer does continue to be a little bit more cautious.
I wish they had Five Belows back where I was when I was a kid, because I always get dragged into the dollar stores, and
I know,
it was never.
and Five Below is better than the dollar. No offense to the dollar store.
At least the Dollar General, which was the fake dollar store, sometimes had some knickknacks, whereas the Dollar Tree was like, there's always a weird smell, and it's like, what are we doing in here? Why are we here? All right, anyway, I don't want to go back to my childhood here. We were in therapy, turning into a therapy session. Let's talk Carvana. Bears are going to need therapy on this one, but lately they've had a nice little moment. We went from 292 to 184 in Carvana, but of course it was, $4 a couple of years ago.
Yeah.
So what do we make of it right now?
So right now, Carvana up 4.5%. This in response to Piper Sandler upgrading its outlook on on Carvana. They're upgrading it to overweight, which is essentially a buy rating. They previously had it at neutral. They've got a $225 price target on this. They talked about used car demand still holding up. It's resilient, less impacted by macroeconomic fluctuations and these international trade dynamics. This is what they see. And then Piper Sandler also seeing room for disruption here. The industry is fragmented, and they think Carvana, that's not the only player they see being able to capture market share. And then just the growth potential. They have, the market capture that Carvana has. It's smaller when you compare it to, kind of the traditional
Bashing
industry
through the
players,
snow.
the traditional dealerships, right? So you can see a projection of growth there from Piper Sandler, and even some other analysts as well, who, when you see it on average, they're projecting essentially 20% growth here. And then their digital.
Are we at the VWAP yet?
But also likes how they're playing with a little bit of a.
Nope. Yep. We're over the VWAP.
The ground traditional dealership. So for those who might want that in-person touch, Carvana is expanding a little bit in that capacity. So they have clearly the digital first footprint that has been their claim to fame, but now expanding and possibly disrupting a little bit the traditional dealership because people then can go either way.
Yeah. Well, that's where this note does kind of resonate for me, I think, because whether you're bullish or bearish Carvana, I think they both agree that it's a pure secular story, not attached to tariff stuff, not attached to macro, really of any form almost. Because the bears basically, the deep bears, like the Hindenburg report and stuff, believe that it's a sham essentially. So that's not going to be affected by tariffs. And then the bulls
Tariffs.
the tech disruptive.
Shut up.
That's not going to be affected either. So it seems like this is something folks can agree on, and I guess I can get why it's up. If it's maybe going to be a little hideout. That's so fun as an idea, by the way. Carvana as a safety trade. Ha! Love it.
It's a neat idea because you wouldn't think of it as a safety trade earlier, because we had Jay Woods on earlier and he was talking
I'm looking
about
at the
safety
5,700
trades,
strikes
kind of disruptive
on the SPX.
and he talked about, a traditional insurance player like AIG, for instance. So yeah, you don't think about Carvana as a potentially place to hide out amid this tariff disruptive landscape that we have.
Okay. Hey, last one, Southwest.
Randy?
Plenty of disruption in the airlines lately. What's going on with them?
So Southwest getting some upgrades, a couple of them. You've got one from both Melius Research and UBS for Southwest. They essentially kind of see what's happening there as a turning point for this. Both of them agree on this, and just a shift in sentiment after a few years of underperformance, especially when you compare them to other airliners. UBS Moving to neutral from sell, their new price target is 36, so a little room to run from here. Up from 29. Melly is upgrading it to a hold from a sell. Their target.
So we got a double top resistance today, and we got a gap
Increasingly assertive changes
on the SPX.
Gives room for potential financial improvement, especially in the face of a tough airline industry backdrop. We know they're all facing this right now. We've had Delta Airlines talk about that as well. And then the willingness.
The VWAP will become support on the SPY.
Don't love that. You know, their theme for years was back SPY free, but now they're
man.
rolling over in that respect. And they had activist investor activity.
Feel a little rusty. I'm gonna go get my chocolate, and I'll be right back.
But we'll see how it all shakes out.
Okay.
I'm watching the
Southwest, what's up
5700s.
right now? That's pretty impressive. Good eyes on that one. Wow. Okay. Bulls piling in, I suppose. Really interesting. Very, very interesting. Thanks, Diane. Good stuff.
All right, you got it.
Let's talk some Nike coming up. We got earnings after the bell. We'll trade it. And markets are trying to firm up right now. Nvidia's positive, Meta's positive, Amazon's positive. Nike, though, has been very negative over the past year.
Empower your portfolio with the Schwab Network.
5700s at 650. I mean
Available
550.
anytime, anywhere, on any device.
I didn't take them.
For
I
free.
should have.
Schwab Network.
I came back and hit the 9.
Opportunities don't stop.
I'd like to see it pull back to right here
So neither do we.
to the
Schwab gives you
21.
round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading.
NVIDIA.
You can trade
NVIDIA's resistance is 119.82. Uh-oh, who gets a C minus? Magnificent. Woo! I see you guys kept him in line when I was gone, didn't you? You're buying the what? The 5725s? Really? You risk taker? Well, they're buying 5725s. I'd wait.
Shares of Nike have taken a beating over the past year from $100 down to about 70 ahead of earnings. Zach Warren joins us from CFRA. And Tom White's here with me, ready to do some trading in stock ahead of the report. Zach, thanks for being here this morning. Get us a little prep for Nike. How can they turn
I'm buying the
around?
5700.
Yeah, you know,
Although if they're cheap,
Nike's well
let me see.
here. I think expectations have come down so much that, you know, I think most
I just don't like where it's sitting.
aren't expecting much here. I think they're getting kind of a break
Too far away from the money.
You know, they're trying to make their digital platform full price selling, so if
Maybe
they're
this
all
morning.
inventory, and they've already guided for that, so I think they're well set up. You know, shares aren't cheap in terms of forward estimates, but we think forward estimates are pretty low, and they have some room to go to the upside. So, you know, we think they're well positioned. You know, cheap in terms of share price. They trade to this 72 level and seem to hold here. So as long as there's nothing extreme, we think shares will be fine.
Okay. What are they having to offload? What's the excess inventories of shoes?
Yeah, it's a little bit of everything digital. So anything they sell digital, they said basically they're going to have to offload because they want to get in a position to change that digital platform to non-promotional, basically, and full price selling. So you know, we think over the next 2 quarters, you'll probably see some impact to earnings. but estimates have already come down significantly. I think this year they're expecting just over $2 a share compared to almost $4 a share last year, so almost cut in half. And revenues kind of expected to be down 10 to 12% for the year. So, you know, expectations extremely low, valuations high, seems high, but you know, we think Nike can get back to where they can earn $3 a share next fiscal year.
Okay, now we're at resistance.
And where are they at right now? $3 next fiscal year. What are they going to make tonight?
So today,
This is a major reflection point.
29 cents, I believe, is the consistent estimate. And so, yeah, and well, this is just for the quarter. So we expect $3 for next fiscal year. This quarter is about 29 cents a share, which is a third of what it was.
Could have got them for 190, the
So,
57.25s, and took them at 220.
What are they going to learn?
$30
from
bucks
this once they
contract.
clean all this stuff out? How do
This
they make sure they
resistance,
don't overdo it again,
Rob.
in a world where there's much steeper competition. So a lot of the stuff they make seems like they might be doing better off if they just stop making so much stuff, or maybe
We're at
make
resistance.
higher end, items. But I guess that's not really their forte. That's more like, there's now been a division of like there's a whole posh side of the athletic clothing industry. So maybe they don't need to necessarily compete, but in reality, it seems like some.
So Yoko says
something's happening. They're gonna continue to
569.40, huh?
Yeah, it's interesting. They said, a lot of people think Hoka and On are your two main competitors, but they've said that their running division has done really well. So it's pretty interesting. It's
How's that
Jordan that's
possible?
struggling right now. Yeah.
Did they break those numbers out? Or are they just saying that and we have to take them at face value? Because the numbers from Hoka say otherwise. Unless you go global, maybe. I guess maybe it's more stable globally. Nike.
Yeah, so they don't break down the exact numbers. I think they set up low single digits for their Nike running last quarter. So if Jordan's hurting right now, I know that Jordan they're saying is down double digits, which was big for them for many years. That was kind of their growth avenue, and so now it's interesting. I don't know where they're going to get growth from moving forward, and that's kind of one of my questions. I have a neutral rating. I think estimates are too low, but I think valuation's too high. So I think they'll kind of meet in the middle. But it's kind of a wait and see period for Nike. We're just kind of waiting to see what the new CEO is going to do over the next few quarters.
Okay. And what would you say should be his top priority? What should we be listening for in terms of strategy?
Yeah, and I think you're right. You hit it earlier. I think they need to focus on a couple of key products and maybe get out of some of the stuff where they're not doing so well and they're competing against.
If we break this resistance, I'm going long.
I think maybe simplifying.
If we get a good pullback,
operating efficiencies. They're a huge company. They're not.
I'll buy them here. But right now we're at a resistance point.
And so they're going to have to look elsewhere for growth. China's hurting. They haven't been able to grow well in China recently.
I could go in small.
China as well.
Okay, Zach, thanks for the description. Thanks for the context of the story. Appreciate it.
Did like 5 contracts for 1,000.
2 trades, one in Nike, one in Lulu, because Viori's not publicly traded. I know that's your brand.
Right.
So we'll do Lulu as a replacement for that. How about Nike? Give me a trade.
Well, option market's priced in about a plus or minus 7.5% move.
Wow.
About $5.
So Nike's got earnings?
Either way.
It's pretty juicy for Nike.
It is.
But I guess that's kind of the last year's standard.
Yeah, you take a look at it. They blame the Jordan brand. I don't blame Jordan. I blame Nike for kind of messing it up. Elliott Hill, the new CEO. What strategy? I think that's the biggest thing. They need a new
Nike's cheap.
brand.
If it's going to move, it'll move up.
Revitalize an existing brand to kind of get people back excited about this stock. But I looked at a strategy in here that's the don't be a hero type.
Now, I've been doing a lot of shoe videoing. I think we're getting ready to break. Rob, tighten up your belt here. It's now or never. So I've been getting into a lot of shoe videos and comparing brands, and Nike has improved, I would say, on their shoes. They got more loftier, more of a cushion. But I also asked the IRS guy this morning, and he said Nikes weren't wide. They don't make a good wide shoe. So to me, Nike needs to have that, get that wide D in there, and I think their sales would improve. So they got a reputation of having a tight fit, not a. Here we go. See, Jimmy called it. These are the 57.25s at $2, and are at $2.25 right now. Pay attention, Rob. All right, there we go. Thank you, Rob, for turning me on to that. I was going to buy the 5700s, which would have done well too, but they've been a lot more expensive. Out at $250, and I got a couple left. Three white soldiers. So we come back to the old resistance, which is the 200. Yoko, I kept 2. So say, give me a grade. Did you get out of here and pout off already? $275 sounds like a good money maker. $290, $310. Heat. Thank you very much. $3, $320. Take it. I'm taking it. I can't take it anymore. Jimmy's out. $340. I said we were getting ready to break. Nobody believed me. And Yoko's going to say, keep your runner, man. You're out too soon. I said do or die, didn't I? Home sales moved the market. There's another, these fat cats on CNBC been saying, well, cost of goods, man. Tariffs, aren't they going to hurt the housing sales? They don't understand one thing. Instead of a socialist in the White House, we got a businessman in the White House. God, I got out too soon, didn't I? Look at that, 440. I just left. Ooh, shit. Well, hell. See, it's chocolate, man. I can just guzzle this stuff down. There's no... La 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 la. We're at resistance now at the megaphone. Jim, you called a megaphone earlier today, didn't you? You want to see it? Who wants to see it? What time frame did I use? I forgot. Couldn't have been the 5 minute. It sure was. We're at the top of the megaphone, Randy. Incorrect. Don't say that. Say you're sorry. Say you're sorry. I have to restrict some of the words you say on here now. I noticed one thing. Okay, here we go. This thing's starting to drop. I was correct about the megaphone. I forgot all about the megaphone once I called it. I should have stayed in the trade longer. I just wasn't thinking. So I get a B+. And Rob gets an A. Magnificent gets an A+. And Yoko, I'm going to give you an A+ today too. Punk, did you witness that? Good job. So now we're waiting for the pullback, and it looks to me like it could be right here. So I'm going to put an alert just a little bit above it. Right off that wick. Well, maybe a little higher than that. Maybe right there. That'll give me enough time to prepare for this next trade. See what that says on the 1 minute. Perfect. Actually, it could be right here. Replace. Take screenshot. So I'm going to show you how I kind of predicted that getting ready to break out. Let me go post this in another room real fast. So the first thing that happened, we broke resistance. And I said I was going to jump in the trade once we broke the resistance. So I was waiting for it to break. So this is a 1 minute candlestick. As it came up, and I'm feeling very bullish today. And we're getting ready to maybe take it again, but I want to explain this trade. So we came down and we bounced off the 9. That's the 9 EMA. So as it comes back down and it starts to move up, I'm thinking this is going to be it. This is going to be a double top break. And once we started to break that moving average, which is the 200 EMA and SMA, and it pulled back and hit the 200, I jumped right in the trade at $2. Because by that time we had broke past resistance and we pulled back. So we see it coming up pretty strong. It hits resistance at the 63 and it doesn't break the 200, the 63 EMA, and then it come back and it landed off the 9 and it went down to 190, 185. This is an inverted hammer. This is a tweezer bottom. So you had an inverted hammer, which is telling me it's getting ready to squeeze. And then we broke out past the body of that hammer. And that was the initial idea to go ahead and get in the trade. And then we came up, we already broke it and it came back down a little bit. And that's when I jumped in. And then boom. So, you know, when I get a stock that goes up 50 cents a contract, which is $50 a contract, and I'm a rookie, and I know things can pull back just all of a sudden, but news came out, I guess, and I wasn't aware of it, of the housing numbers. So this is right at 10 o'clock. This is before the news even takes off, so somebody knew something, or it bounced off before that. Now I'm taking all this gibberish, this tariff gibberish, kind of sweeping it under the rug. It was the way that they did the interest rates when they first started talking about the interest rates lowering. We didn't hear for 2 to 2.5 years. All we heard of was about when are they going to lower the interest rates every single frickin' day. And I get annoyed after a while of hearing it over and over and over and over and over. The market's already priced it in. So we kept running up. And they kept bringing, when are we going to lower interest rates? You know, 6 times, they say. And we only lower, and it took almost a whole year, 2 years before it took them a whole year before they even started lowering them. Year and a half. And they were wrong. And they're wrong about these tariffs. There's a little bit of right to it because they're automatically knowing that the market's way overbought and they want to bring it down so they can get better deals and double their money, and they're by the puts and it's all rigged. But if you want to get ahead of the game, you get, it's like, son, go in there and clean your room, clean your room, clean your room, over and over and over. You hear it over and over and over. Before you know it, your room's clean, and it's always kept clean, and she's still going in there, clean your room, clean your room. Well, Mom, I cleaned it.
Up 11% this month alone. The broader market, certainly the overall tech sector, and some of the other chip makers that we talk so much about, like
I could have made good money on them 5700s.
Away from the highs, so still has a ways to go to make up for that. But we'll be reporting earnings tonight after the bell. The memory chip makers actually higher today.
I could have got them at $6, $5.90. Now they're at, they went up to 1300.
Memory pricing will be key. We've seen.
Okay, we're about to hit my first support.
On Micron because of the fact
21.
That prices have been rising. Of course, China risks we'll closely look for. We'll closely listen.
In the
for
63. So
just commentary on inventories as well.
Rob,
as well as that supply
prepare yourself in the name of the
in
Lord.
terms of what the numbers we're actually looking.
Caroline, you look hot today.
On revenue of $7.9 billion. That would be at nearly 36% in terms of revenue growth from the year-ago period.
Period.
Breaking that down, DRAM revenue is expected to be $6.2 billion. That's up 49%. I had mentioned high bandwidth or high bandwidth memory chips. That's a key growth driver. So likely we'll hear about that being the robust part of the business. Meanwhile, NAND revenue is expected to be up 2% at $1.6 billion in revenue. In terms of the outlook, remember last time Micron reported back in December, actually disappointed with the quarterly outlook due to weak demand for things like PCs and smartphones. They had said that they expect low single-digit percentage growth for smartphones in 2025.
See how easy that was?
That area of the business, the more consumer-focused area of the business, to see a rebound in the second half of the year. So we'll see what they have to say in terms of.
If you can count to 3, you can trade with me. If you can count to 4, you might make a little bit more. So we waited for the 21, and now we're at a resistance level. Back to the top of the megaphone. One, 2 bits, and a freebie. Boom, baby. Prepare ye in the name of the Lord. Anybody want to say amen? Hit the like button. Hello, Richard Nixon. Peace. I bet you're rolling in your grave today, knowing that Hillary got away with 32,000 emails and deleted them. Well. Today's going to be a good lunch. It's either broccoli or a sweet potato, along with my stew. And I'm going to go take it out of the fridge and make sure it's thawed out. Now we got a right shoulder up here. If we break this next resistance at the double top, I think we need to have consolidate and count to 4 and make a little bit more. And we're going to do it like this. We're going to take the trend line from this body right here and move it up to the next body and set the alert right above the 21. Remember, I said we're at capitulation. There's the new high right there. Okay, we're at resistance. Tariffs. Amen. 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 Amen.
Trading at Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos, webcasts, articles, courses.
Spy's at 413 now.
Crafted just for traders. And
Ones that I called.
Stacked with content curated to fit your unique goals. You can spend less time searching and more time learning. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Well, Yoko,
Stock's looking pretty decent right now.
Jimmy called 59, 56, 99, 58. Do I get a star? Double top. There we go, baby. We're kind of stalling out here. We still have 23 more, 20, what? 27. It's now, 32 more minutes before the fat cats go to lunch. And we got a wick. Yesterday's high. Which is right at 57.11. And we're going to do this. I'm going to do something different here. Remove the left. I'm going to be tricky. Put in that. Or change it into a smaller one. Put it in that and change it to a green. Hello, this is Richard Nixon. Always Clean Janitorial, Retail Traders, may I help you? This is on a recorded line. I'm so good at that. They hang up right when I say it. So it's really not bright enough. Let me just get more translucent. Yeah, that works. So we're back at support. We'll see if we hold the 9. This is how you want to look at it right now. If you're in any kind of trade and you're in a runner, we got 2. We hit the comeback, and this is where I called that second one. I jumped in right here off the, and I've sold it once we hit that resistance. But what I'm saying, we could come back and hit that 21 one more time, or we can still stay bullish and keep the 9 EMA as support. So if you're going to put a stop in it, there's 2 places you could stop out. Right below the 9, and we went just a little bit below it, or wait for the 21 and then stop out there if you're going to set a stop. Because that next is a pretty good drop on down, and you could lose quite a bit of money in that one, if not here. But this is the old double top resistance. The gap, there's that gap. So we could bounce right here if we want to stay bullish. Plus we have the 1, 2, 3 right here, breakout. 1, 2, 3 bits, and that could be your new support line. So if I was going to set a stop, I'd set it under there or under the 21. And then you got this megaphone. So any of them are good solid support levels. You got 2 megaphones. This one, and then the big one. Now we're getting ready to squeeze again. So we don't become bullish again until we break the 9. Then we come up to a double top. Well, what's the heck, man? Aren't you gonna... What's it take? Richard, did you take this trade? I'm on a roll, buddy. This room's on a roll. Oh, man. Oh, I thought she was dressed up in that old outfit. Okay, this is the final resting place. I don't know if I really want to jump in right now because I'm getting ready to go have lunch. I got to get back to my fasting again, get that early lunch in. I put on a couple pounds here in the last month. That was the last support that I called off that 21. I haven't stopped out yet. I'm still in it. As long as I stay above that megaphone, boom, baby. 740 for these 57.25s. And got in $2. Yep, yesterday's previous high. I'm going to take profit here. There it is, resistance. I hate to sell it. I know I'll be making a big mistake.
There's still this massive feeling of like deference in the housing market where we're going to wait to find our better deal, or we're going to wait for rates to come down, and this waiting game is why right now there's such a supply issue in this market.
Well, yeah, there's a lot of You know, a lot of waiting and seeing. We were talking people delaying their taxes this morning.
Yikes.
Because they're waiting and seeing. The chart has been more about selling, and pretty consistently now for what, since, I don't know, last year?
Yeah, it's been a rough move here for this particular company. We can see that we did hit these highs near 193, but from there we started to trail off. We couldn't quite keep eking out those new high prices, and here was where the decline really started to increase in its severity. Once we broke through our purple 252-day EMA and this relative low point that we established back in October. From there, 143 also stuck out to me. It was around the site of our worst close. It was around where we opened up after our gap down, and then subsequently retested that same level and failed. So now that's perhaps a more extreme upside point to keep in mind. A more close point would be around 130, high point, and then to the downside 116, low point, low point. So we have a pretty convenient range to keep an eye on as we head into this earnings event here. But an interesting development, we're breaking out of our trend line and we're breaking above our yellow 21-day EMA heading into this event. Still haven't quite pushed above that 50 midline here, but some interesting behavior for a beaten up name with a big potential catalyst on the horizon here today. So if we were to look at our volume profile and standard deviation channel studies, heavy volume right around where we are now also happens to be our -1 standard deviation channel. So if there was a place for the bulls to try to make a stand, it seems like this is the logical place.
Yeah.
To the upside, volume picks up again right around here near 137.
That's a pretty decent area of support that's developing actually for Lennar. It's kind of hard to see because there's so much negativity tracing back to their third quarter earnings last year, which was the high. But one other thing I'm wondering, if this were to go the other way, though, is this like a head and shoulders thing going on, possibly?
Perhaps. I mean,
If it breaks down, I don't know.
the behavior in general is what you try to look for. You would be looking for the rising price activity, retreat to support, a peak that takes out the previous peak, and then the volume starts to decline, then you form the second shoulder. That's kind of the general setup you look for, and then a breakdown below the neckline. So, it can look lots of different ways. It doesn't have to follow the textbook pattern. It's just the general idea of these patterns that you try to look for.
Fair enough, okay. Lennar seems decent actually right now on the chart. Not bad. 1.5% pop today, like an existing home number. Housing, and what goes with housing? Deliveries, I guess. FedEx.
FedEx, I think it's such an old school adage to say that this is now a barometer of like the health of our overall.
Definitely not.
Yeah, right. I feel like that's something I always heard, and I just like so now passionately disagree because of the fact. I mean, you could just say right, and you could just look at RSI. You could just like find numbers to back the fact that it doesn't trade with a massive correlation with the market, or it's not a 40.
Man, my throat.
Look at the giant gaps on the chart. These are all earnings because the market keeps getting stolen, taken away from it.
And coming into the quarter, sales have fallen now year over year in 8 of the 9 last quarters, which illustrates how difficult of a business it's been. Logistics have been disappointing. We're in this great window.
I'll be right back.
Like it's years long. But the severe weather, as well as China data,
I'm going to eat before I take a licensure. I'm going to eat some water.
I mean, the wildfires we saw in LA, and even this material shift from the now, I think, tone regarding consumer spending and some of the health of that e-commerce, all of that are seen as now perhaps negatives into this print. I also don't think that we can make the argument that those are all well understood now. I mean, we pulled back 21% from highs. We're a whole lot closer to lows here, about 4%, than we are at those recent highs. And I would say maybe a lot of the overall, the consistent headwinds of this market right now are already priced in, which can actually be a decent thing for FedEx, which is undergoing this years-long massive overhaul of its business, which has been not necessarily a bad thing for its earnings, but I think there's an unpredictability still felt with these logistics and shipping companies.
Yeah, very fair. I think that's accurate. The stock has had a tough go of it. A lot of gaps on this chart from the last year's earnings, right?
It's hard for me to not think of FedEx and
Castaway?
Exactly, yeah.
Really?
That's
what you were going to say?
We're at the part in Castaway where Tom Hanks is trying to rescue Wilson and he's struggling and about to drown. That's what the stock price is like to me.
I guess it really does associate with an entire generation.
I feel like that was much of a stronger correlation than they intended because I've thought about that for decades at this point. But You know, now, look here though. So 244 around this area, this general series of lows, we tested that a couple more times recently on the back of this rather severe decline that took us down through all of our exponential moving averages we follow, and we did bottom out near about 239.50. This was our lowest point since February 2024, so a little more than a year ago here. But we've recovered. We managed to fight our way back above 244. We have not taken out the yellow 21-day EMA just yet here near 251. That would be a potential point to keep an eye on here. RSI starting to peak above this longer-term downward sloping trend line here in red, still short of that 50 midline though. So we've got some work to do. We're still within our downward channel, but at least there's a bit of a supportive area that seems to have taken hold. But for now, you know, we're below our point of control. Volume profile really not very helpful in this situation, unfortunately. Kind of just, you know, a big block of volume across the board here. So the only clear spike near 276 or so, that's our point of control. -2 channel comes in here near 237, so that could be a downside point to watch. If we do fall lower though, take a look at our 5-year chart real quick, because there's some things that kind of would worry me too, is that we're falling below the long-term point of control. We've got this set of lows here near about the same level I mentioned earlier. Then not a whole lot until we get here. Next volume node comes in near like 228.
All right. FedEx, you know, not terrible when you zoom out. I'm kind of surprised actually. The long-term chart is not bad. This trajectory, this sideways, this support holding, it's way better than I thought it was. It's very insightful. I like that. Because short term, it just looks, you know, to your point, cast away. Speaking of which, Carnival Cruise Line, right?
Carnival, I actually think that
Decent transition?
Yeah, that was a decent transition.
Water,
Hopefully you don't end up like in Castaway, but yeah, you could definitely run that risk if you got on a Carnival cruise. I also thought, okay, I know every time we got cruises, I mentioned
Dark
this.
stuff.
It's amazing to me that this company only has 27 ships in its fleet, and it's one of the largest. I mean, isn't that, I feel like maybe I'm just not well versed in the cruise world, but like United Airlines has thousands of planes, and I guess I feel like 27.
Another can have that many.
Well, yeah, and I guess that's the nature of when you have ships that carry over 3,000 people.
Yeah, they're kind of hard to park. You know?
Real hard to park. I mean, look at that thing. So we're expecting a massive improvement on top line. We're expecting, or excuse me, on bottom line now, a profitable quarter, 2 cents a share. Revenue is expected to modestly climb about 6% year over year, but
okay, I got 57.1162.
Onboard spending has driven some robust yield growth, as well as cost-saving initiatives have also helped improve their profitability. First quarter passenger ticket sales are estimated to rise about 5%, as well as their strategic investments in advertising. I thought this was so strange. Their web visits in 2024 rose 40%. And
So they sold ads on there.
Yeah, I guess they just sold ads everywhere, and that
People
is
were,
translating into
that's what TripAdvisor does, you know.
in an aggressive way. I feel like their advertisements.
Hotels, Expedia, they do that.
That's true. And I guess that when looking at the tourism right now, looking at, I mean, like hotels, airlines, I know every single thing is down substantially, but they didn't give guidance that indicated there's not still an appetite for travel. I mean, the hotels objectively had some pretty strong earnings, but all sold off on like very specific metrics. And then we see airlines that have also pulled back some of their guidance, but there's still a lot of, I'd say, healthy demand.
Seems like it.
In tourism, absolutely.
Pretty good revenue growth, the ticket sales expected. Hit me with the chart, Rick. What do we got?
I could have given you a transition from Lennar to Carnival. You did a good job, but they're both happen to be headquartered in Miami, Florida. There you go. Cruise line makes me think of Miami much more than home builder, but you know, that's the way it is.
Fair.
So, downward
This is a major resistance right here.
72 was our high point on the year here. We have struggled and fallen below our.
If it wants to continue, it will. If it doesn't, it's going to pull back and have a major correction to 56.96. 56. So I'm going to raise my alert up above the megaphone,
so that was a potentially interesting
right about in there.
that you could have taken note of here. Not really a great idea to base trades on one single indicator doing things, but the crossover out of the oversold area, the breakout out of the trend line, that was interesting behavior to consider. So we can also see our green line here, 19, repeated high.
Shut up. So this is it. Yoko, with your expertise, are we going to break resistance here, or are we going to pull back? Oh my God. Someone got a young kid there? Francisca. Your mic's on.
Oh, so sorry.
That's all right.
I don't know how to turn it on. Sorry, kids in the background too. They're probably. Oh, there it is. Sorry about that.
You know where to turn it off?
Yep, I got it. Sorry.
Okay. Welcome to the room. You got a youngin'?
Stocks are trying to make a move here after a negative start. We are positive and building on strength. Caroline Woods and George Tillis are with me to check in on the session. Caroline, what's working best for us right now? I see Meta up almost 4.5%.
Today, actually seeing strength in the tech sector, consumer, discretionary, comm services, basically everything aside from real estate and consumer staples. We are seeing some earnings winners. I know you were already focused on Five Below. That's a big winner. But Darden Restaurants, the parent
I
company
love
of
you.
Olive Garden, also seeing some pretty impressive
Caroline.
despite the fact that actually the report was pretty mixed. Earnings beat.
So we pulled back.
And comp restaurant sales
And I've got
also
dinner
actually
cooking,
fell
and
short
I'll be
of
right
estimates.
back.
They were up about 0.7%, but were worse than what analysts were looking for. Longhorn and Olive Garden comps, despite the fact that they saw growth, both disappointed. But it sounds to me, based on what analysts are saying, that they sort of expected a disappointment there, given weather, given flu season, and this overall pullback that we've been seeing in terms of consumer sentiment. Investors appear to be focused on the positive, including comp restaurant sales of 3% growth for 2025, according to the forecast, and an expanded partnership with Uber, which is also giving Uber shares a lift today. Or maybe not, because we're also seeing Lyft shares higher today as well. So strength in ride sharing as well. Well, it's actually Cheddar's Scratch Kitchen that the new pilot is going to be expanded to. I was taking a look at the map. No locations around here. I did see a few in Virginia, so I thought maybe you might know it, but maybe not. Should also note Kava is having a good day today as well after an upgrade over at JP Morgan. It's been a tough month and tough.
Oh yeah, Kava is probably cheap. I love this one.
Impressive run higher, but JP Morgan says buy the dip. It's a good buy now. In terms of earnings losers,
Fat cats are coming out and buying the dips.
on the S&P 500, despite
I like this stock here. Oh, look at that, nailed my support too.
low end of their full year outlook. It seems like maybe new bookings decreasing 3% from a year earlier, weighing on shares. IBM is also falling today, almost 4%. There's a report from the Register saying that they're going to be laying off 9,000 people, or as many as 9,000 people could be at risk.
Man, I missed that
from
one.
layoffs that sound like they could be pretty broad-based, including a quarter of the staff at the company's Cloud Classic operations. So a few losers in the mix, but overall the winners, taking charge here today. I will say Netflix did turn negative, but the rest of the Mag 7, or the Mag 7 all holding up and seeing some pretty notable strength in tech.
Pretty good session. Appreciate that run through. A lot of stock-specific things. Nvidia up 1.5%. George, it seems like the tech bid is stable, and we got Apple up too. Everything higher, with the exception of maybe Netflix, as Caroline was talking about. The fact that staples are down suggests some offensive positioning and some real bullish energy in my mind.
Yes, I mean, just at least in the short term, things are looking better. Obviously, the markets are higher, and this is just based on the catalyst from Jerome Powell. It comes down to less runoff of the balance sheet, that $20 billion that shores up bank reserves and liquidity. This is what I've been talking about is potentially the problem, especially when there's a fiscal drag going on. So there's now a substitute for fiscal drag with the Fed coming in and shoring up the liquidity in terms of bank reserves. So right now, one of the indicators I've looked at in the last couple of weeks was the severe backwardation in the VIX futures, and looking at it right now.
Now they don't make no sense.
The futures, as far as what I can tell, is back in
Can
contango, but it's in a slight contango. So there's not necessarily a lot of premium in the forward VIX futures versus the present, or the ones that expire in April, roll off in April. So be mindful that.
J.P. Morgan, John Eckel, or whatever, upgrades Kava from neutral to overweight and maintains a price target from 110 to 110. From 110 to 110. That's a big difference, a big spread.
So if you call the gap 5,800 somewhere around the election, that's kind of what I'm looking at, because that might at least just set us back to neutral in some ways.
Yeah, I think so. And so you have to
Check
look
my
at the
soup.
technical picture now, because obviously we're starting
Homemade,
to
I can smell it. It smells
move in the
good.
right direction if you're of course.
Yeah.
But we're not out of the woods yet. I mean, the technical damage is still there, and it hasn't essentially confirmed a trend reversal. But we're starting to see some improvement. But that can all change at any moment based on escalated tariff announcements and so.
All right, great stuff, guys. Thanks very much, George Tillis, Caroline Woods. Nice combination of thoughts there on the macro and stock specifics. Trading 360 with Nicole Petalides is up next.
Nicole.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because
It's still a little frozen, so I'm going to let it warm up and eat my sweet potato now.
You can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting.
Francesca,
Start investing in stocks.
sweet potatoes make good baby food.
And more. Get more with Schwab Bank Investor Checking.
It'll make your baby fart.
Built for investors.
They love sweet potatoes. Yummy.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey.
I think this is good to go all the way back to
Children, planning for their college.
101.
Someday it'll be their turn.
Kava.
Morning movers, be the first to find out what's shaping early market action. Tech, Options Corner, Futures Focus, Technical Analysis, Morning movers.
So the SPX has calmed down quite a bit here.
Every trading day at 8 a.m. Eastern,
I think
only on Schwab Network.
we'll know here any second if this thing's bullish or not from here. Major support level.
Whether you're an experienced investor or
Okay, here we go.
Charles
Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis
5725s.
different charting techniques like trend analysis, price patterns.
I said we'd have a major pullback, didn't I?
And much more.
That's it.
Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Rob. Fat cats are at lunch, heading to lunch right now.
Trading Day. Welcome to Trading 360. I'm Nicole Petalides. We're live
Boom.
on the floor of the New York Stock Exchange with a big show for you today. Back in the
Right about now, there's the megaphone.
early part of the day. Our 360 spotlight taking a
Or the 1, 2, 3. Let me see.
including trends we've seen in gaming launch.
Might jump in right here.
And also our disruptor. Well, that will be Rivian after receiving a downgrade over at Piper Sandler. We'll have the details. And our 360
Yeah, it's the megaphone.
Micron ahead of the earnings that are due out today after the closing bell. Here's a look. So early this morning, you woke up, you saw those futures in the red. We started off in the red. We've been up 3 of the last 4 trading days, and so it looked like we were going to be giving it back, only to see the market turn around throughout this day, and now you're seeing green across the board. The S&P is at 5,700. We haven't seen that in a bit, and that's up 26 points. The Nasdaq's up 0.5%, as is the Dow Jones Industrial Average up 240 points. The Russell up 0.25%. Oil and gold are both higher today. Gold has been at record highs. It's at 3,047 today. 68.15 on oil, which is up about $1. The VIX is below 20 at 1963 at the moment, and the 10-year bond yield.
Gotta hold this support or I get right back out.
We won this after our Fed speak yesterday, and we're still seem to be on path for 2 rate cuts this year after we heard from Jay Powell and his press conference yesterday. A look at the top moving stocks in today's market. Alex Coffey is here, host of Next Gen.
There's a root.
Looking at Tesla, has been under some pressure again. Let's take a look at that cut from Piper Sandler and more.
Yeah, although it's a price target cut here today, Nicole, this is mostly a bullish note and stance from Piper Sandler, more just an adjustment, I think, given the recent price action and some adjustments to their delivery expectations.
Come on, baby.
That said, Piper Sandler analyst Alexander Potter lowered the price target on Tesla to 450 from 500. They do keep the overweight rating on the shares. They talk about the stock basically retracing that entire post-election move and being back to that pre-election valuation. But nothing's changed regarding the company's ability to do what they call remake the world's transportation and energy markets. They do say, though, however, that they're cutting their 2025 delivery expectations and say Tesla
Might have to get back out of this thing if it don't break this 63.
They say it's not only politics to blame, rather that factory shutdowns and the Model Y changeover are the primary cause of lower deliveries. And they do say that none of the price target and valuation takes contribution.
We got a hammer right here. It's called a dragon, almost like a dragonfly.
As a service, so some things that they're working on for the future, but that their current price target does not reflect that. And they say, based on all of that,
It's a dragonfly candlestick.
230s. This is a cheap stock based solely on autos, energy, and full self-driving. So, despite the cut, a 10% cut to their price target. Pretty optimistic words from Piper Sandler analyst Alexander Potter.
Understood. I mean, really nice. It's nice when you hear some good things about Tesla because there's a lot of positive out there. But month to date, just for March, it's down 20%. It's been about 50% off the highs, right? Like we have it posted there. Thank you so much, Alex Coffey. Great to see you, host of Next Gen Investing. Let's get some insights in the news shaping the markets. For that, we welcome in.
I'm going to go get my suit. I don't want to leave this trade too. I think this is going to be a scalp. Real fast scalp. I'm up $50 on it right now. 60. Well, it was. I didn't see what she looks like today.
By the end of the year, and if you had to get 2 or more, it's because the economy's slowing down. So I think this market's due for more volatility, and you're not even getting into the April 2nd time.
Oh, get out of here.
The president saying it's going to be the tit for tat tariffs. So I still think the market still needs to de-risk here, because I still think the NASDAQ is a little bit excessive in valuation, which is skewing the indices. But I hear the Fed telling you, and they're mentioning words like stagflation potentially. So I hear those type of phrases, and I'm not as optimistic on the growth aspect of the market right now.
Yeah, understood. It's interesting. So you'd be surprised to see the chip cuts. Meanwhile, you have the
I would,
president
unless
asking
the
for
economy
cuts
slowed
already.
down.
Yeah, well, the president's
if it-
asking for the cuts because concerned that the tariffs would bring more inflation, and that could maybe affect the economy too.
Well, correct. And now you may see the rhetoric pick up between the Fed and the president, where the Fed won't respond, but it will just say we're fighting the inflation target. But right now, the president, up until this point, has been leaving the Fed alone. So if he needs these cuts because of the tariffs, you're looking for more uncertainty. So I'm not sure that everybody's reacting to the level of uncertainty that the Fed just gave us. The Fed just changed the projection on growth and inflation. And they didn't do it in the right way. They didn't say growth is going up, inflation is coming down. They're saying they see growth coming down and inflation going up. And if that's the case, I would be surprised to see the Fed cut, unless there is a real problem with the economy.
And I know, you're like, hello, is everybody listening?
I'm listening.
Yes, that's right now.
More inflation. I mean, there's concern about stagflation, right?
Yeah, I'm gonna get out of this
What
one.
do you do if you're an investor? You have a portfolio, you want to make
I think
money.
I've waited
there's
too
always ways
long.
to make money. What do you suggest?
I think you look outside the traditional Mag 7, which has been dominating this market for several years. We think the equal-weighted market, the S&P, should outperform. We think there's value in
Break.
pharmaceuticals, energy, some industrials, financial. So we think the general market looks reasonably priced. It's just
All
heavily
right,
skewed
570.
by the Magnificent 7. So we like other areas in the market. We like companies like a CME
I got it,
or
560.
Waste
I'm
Management
done.
or EOG. I mean, we're dividend investors, so we're going to want some cash flow to offset any
I'm out.
volatility in the portfolio.
So, CME, Waste Management, what was the other pick?
EOG. So they do oil and gas. They pay up 3%, a little over 3%. Has 11% debt on the books. They're increasing their buybacks.
I got out before everybody else did, that's for sure.
Return on capital is over 25%. We like them long term. Waste Management just had the acquisition of Stericycle, which should give them 5 to 7% growth in EBITDA.
Rob.
That has a 10% growth in their 1.4% dividend yield. We like that. And CME is a toll. I mean, they don't really have credit risk. So as you increase interest rate volatility, energy volatility, and they're gaining shares in cryptocurrency, they pay you a flat around 2%, but they give you a special dividend for a fifth dividend of the year, which brings you up to about 4% on the yield. So we like these type of companies and think they should do well in a volatile market.
Right. You know, what's interesting, you mentioned dividend a few times. I know you're often looking for the dividend payers. That's a strategy that you definitely like. And the energy, I mean, you talked about EOG, and that's something there. Anything else?
I'm eating my stew right now.
7 is not really what you're looking at now. Even with the pullbacks of 10, 20, 30% on some of these names, that's not where you're going. You're trying to pick less risk.
Yes, we're de-risking. I mean,
So I think we're kind of consolidating up
We're
here.
just not adding at this current price. There's a few stocks that we really
This idiot comes out here and talking gibberish. You don't sound like he's a Trump fan. What do you think about that, mannequin? I'm glad you found my... How long you been watching my YouTube there, Francisca? I think they should harsh penalties. Any kind of vandalism. These protests, they're overdone. So let me explain this one. How I called it, because it came back right where I said it would. Man, I'll tell you what, this shit is good. I make the best soup ever. So this is what I called out this morning. We called the bottom down here on this megaphone, and it runs straight up to a double top. Once a double top is a bearish indicator that we might consolidate and pull back and consolidate. And we had a real good run off the 200 SMA and EMA, and we went to a double top with a lower high, just a little bit lower. So I call it a reversal. This is a megaphone pattern. That's the major pattern in here right now. This was the pivot point inside of that pattern. So I was talking about the pivot point when we broke out from it. It can pull back to the pivot point. Right now you're above the top resistance of that megaphone. So when we were up here at the double top, I said we could pull back to the top of that megaphone. And I went ahead and jumped in the trade. And the 1 minute lined up with the 63 EMA. So I had two confirmations to take it. So it hit the 50 SMA, and I jumped out of the trade at the 50 SMA on the 1 minute. So that's your new resistance to break. So now if it comes up, it created what you call a head and shoulders. And that shoulder line will be your next resistance if it decides to break out. But when we were at the double top, I had a pretty good feeling that we're going to pull back to that major support level off that top of that megaphone. Now at 590. Now you're coming up to another resistance. This is called a head and shoulders. You got your left shoulder, and your head. Then you got your right shoulder and your right shoulder. So this will be like the, damn, I should have held on to that. We broke that 50 SMA. Now I would have got out of it at 590. That would have been another $80. No, it would have been another 60. I'd like to see it give up and come back down here again to the bottom of this here megaphone. Then it'd be a 1, 2, 3. So I'm going to raise my support level right above that trend line. I can't see. I want to bring it to the top of that Well, I'm going to get rid of this, because I can't see. I want to bring it to the top of that candle. I'm going to set a new alert right above it, just a little bit above it. Women traders are smart. You got to pay attention to them. We pulled back. So we hit that head and shoulders, and I said we'd pull back. I think we're going to pull back more. So I'm going to be careful from here until I get done eating. I'm going to raise this alert above the 200 SMA. I'm looking at these two right now. Magnificent. Can you tell what I'm doing? I am sipping, and I am slurping my stew. Very professional. Nope, this is beef. Had salmon taco yesterday. God, this is good. Any of you ladies would like to come over and have some soup with Uncle Jimmy? Oh yeah, grilled cheese. I make a good grilled cheese sandwich too with mayonnaise. Okay, that's it. I just had my soup. I'm done now. And then tonight, after I get done trading, I make me a banana strawberry smoothie with an orange. I'll be right back. Oh.
JP Morgan has 121. BMO has 128. So it's not like they see a ton of upside. But this one, you're thinking a long-term thing too, right?
Yeah, longer-term upside potential, but what's great when we find these neutral type of securities is a dividend play. We're in this more for not necessarily capital appreciation, but adding some income, smoothing out that volatility, get some cash on the sidelines. When we find a bottom, we can deploy.
All right, if you have a Coke and a smile, you know, everybody loves a good Coca-Cola. The stock year-to-date is up about 11%. It's had sort of a roller coaster throughout the year. Some of your thoughts on this name?
Yeah, just wanted to pull a consumer staples name, and again, this is showed up on the technical scan as well. A lot of those did, which I found very, very interesting. Steady dividend and cash flow. Theirs is around 3%, but they also have a global exposure, and I think that's important when we're considering the current environment, over 200 countries. And there's this trend where it's less alcohol consumption and more bubbly drinks that have some type of health benefit, which aren't necessarily Coca-Cola, but Coca-Cola offers more than Coca-Cola. So therefore, I think it's a great play where we can smooth out that volatility within your overall portfolio, add some dividend, get some cash that we can deploy.
Yeah, I mean, I saw that competitor Pepsi recently acquired Poppy, the probiotic, fizzy drink, but they have a slew of things under the Coca-Cola brand. I mean, not just the sodas and Zero, but they also have grapefruit juice and all kinds of things. Schweppes, Fresca, that's a great one. Dasani and more. Let's see, Rich Cat, your thoughts?
Yeah, pretty much just all drinks. That's the big difference between Coke and Pepsi as companies. Pepsi's much more of the snack foods here. But we can see that now we have sort of a similar setup to our last chart, but this one maybe not quite as strong though. We tested these old highs that we established here near 73 once again recently, but a little bit of a breakdown here. Not anything severe by any means. For the most part, we are struggling to retake our yellow 21-day exponential moving average near about 69.53. That roughly represents as well a point of highs and lows that we
Here we're coming down, baby.
Section near 70. So a push above 69.50 to 70 would be what the bulls would want to see. But you can also look and we backtrack a little bit with me. We had a downward sloping trend line that was pretty resoundingly broken when we had our earnings surge to the upside here that helped propel us further. Never even really come close to testing those post-gap up lows near 66.41. So that's something to consider. If we do move lower, that would be a key supportive area to keep in mind. A little bit of bearish divergence as we made those highs, but nothing goes up forever. Things have got to slow down at some point here. What the bulls would probably want to be looking for would be some type of bull flag, bull pennant type of behavior here. We had our big gap up. We had a continuation. Now we're having a little bit of consolidation slash downtrend. So that would be kind of the hope for a bullish trader in this scenario. If we were to look at our volume profile and standard deviation channel studies once again, we can see volume node lines up with our +1 channel near about 72. So that seems like a decent point to consider to the upside. We're in the thick of another smaller volume node right around here that lines up with our 21 EMA. And to the downside, like I said,
I want to go down a little bit more before I jump in this. I think it's relaxed time now.
All right, thank you for that, Rick. And you're right? One's more snacks, one is more drinks, and that's that. Let's take a look here at NVIDIA. I already have NVIDIA up, so my mind's on NVIDIA, guys, because this one everybody holds it some way, shape, or form in an index. If you're not a Mag 7 person, but really it hit a high, it sold off. Some of these names are down 10, 15, 20, 30%. So 153 was the high. Your thoughts on NVIDIA today? I'm glad you brought us this.
Yeah, I thought it was important to talk about, especially after the event yesterday.
Yeah, we had the GTC conference. Sorry to interrupt you.
Oh, yeah, absolutely. What I think is important, if we take a step back to the sell-off, since it is a big component of the market and we have a lot of retail participation, and we even saw the unwind, if you remember the yen carry trade, which is actually very ironic. We're at some same levels that we were at that time on the broader S&P 500. Nonetheless, I digress. Because of that, it's a big component of the market. There's triggering of margin calls, and that's inclusive on the retail side, which is about 53% of the market participation, which means it's a drastic sell-off that could be systematic just to raise cash rather than fundamentally driven. That brings me to GTC. I'm still a big proponent of NVIDIA. In NVIDIA, it's more than just chips, and we saw this from GTC. We even saw this from the previous event in Vegas where you have the keynote. My big concern was, is this just chips? That's Wall Street's concern. Where is the demand going to come from? That's not the case with NVIDIA.
Right.
It actually created a moat with CUDA around it. So think about this. I'll use Tesla for example, needs NVIDIA chips for autonomous driving. On top of that, it needs a layer of software in order to train it. That's consistently there. NVIDIA provides that. It needs training and inference models. NVIDIA provides that. Essentially, NVIDIA is creating this AI ecosystem with the AI for everything, where it's becoming an end-to-end solution. And that's the goal, which is a longer-term goal, which means there's volatility if something puts, the market tends to look at things quarterly. However, I think it's a wonderful buying opportunity right now because of that hopefully compounding investment thesis we just
I mean, you think we see that, and I understand what you're saying, because I've been hearing a lot about that NVIDIA is just more than just a chip. It's its whole model, the AI ecosystem, as you propose. That was very well put. The 153, you think we'll see that 153 again? I mean, how long does it take to get back to highs?
Yeah, I think we will. I think what the Wall Street wants to see is another company saying, I have revenue, because it's not enough that NVIDIA is consistently meeting expectations.
Right.
They want to see somebody else benefiting from NVIDIA, which is so difficult, and that doesn't even make sense saying it out loud, but that's what it seems like Wall Street's looking for.
And we heard that deal yesterday with General Motors,
yes,
too.
Exactly.
Actually, we heard 2 days ago. Rick, your thoughts?
I guess my comment, just kind of piggybacking off Jessica, is, these AI companies, even if new AIs need less chips, they still need a ton of chips, they still need a ton of hardware, they still need all kinds of supplies. So it seems like long-term the prospects are pretty good for this field. Now, if we were to consider, just based on the demand situation here, just referring to that, but if we were to consider our chart here, we can see that for the most part, we had an uptrend here, moving higher and higher, gradually increasing our lows. We did bottom out here near our purple 252-day EMA. That's when we started running into some trouble. We had our highs near 153, subsequently lower and lower highs. We saw momentum trending downward. Now we are sandwiched between our purple 252-day EMA and our yellow 21-day EMA. So some kind of mixed pictures here, because we are not breaking above our 21-day EMA, but we are potentially pushing out of our shorter term white downward sloping trend lines here. So what the bulls would want would be a big push above these resistance levels and to reestablish some traction above this red line, 130, highs, lows, 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 low point again there in consolidation after a retest here. But that would be another breakout point that the bulls would want to retake. So if we were to assess our other key levels based on our other studies, once again, we are right in the thick of a volume node here, near about 120. So based on our other technical indicators, right about where we are now looks pretty important to hold. If we do move to the upside, we take out that 130 level. The next volume node that stands out to me, near about 140, and then we have our gap low and our subsequent high where we retested that area near about 142, Nicole.
All right, thank you for that. And showing the higher volume now as we're getting to lower levels and people stepping in and trading and buying and such. So Jessica, final thoughts. I know your podcast has been doing really well.
Oh, looks like we had our second support.
That you've been
missed that one.
Getting into final thoughts?
Yeah, absolutely. Well, we have been discussing
No, we
the
didn't.
difference between soft data and hard data,
Still
consumer
here.
sentiment, and how that's exasperated, because the most dangerous market mood is euphoria. And then we get caught off guard by
Euphoria?
which I argue has already occurred. And now we need to consider counterbalances if there is slow growth. We're also trying to
Capitulation, baby.
which, if there is slower growth, companies can't attribute costs or pass them over to customers as much. And we don't know how that math is going to work out just yet.
Right.
And that could be, there are counterbalances in play as well.
Right. Yeah, good point. So we'll continue to take a look at the differences between those pieces of data. What's the name of the podcast?
Market Make Her.
Okay,
Yeah.
great. Jessica and Skip of Stockbrokers.
Market Make Her.
For being here, our own Rick Ducat there on the charts for Duke and
She thinks she's
Coca-Cola
cute
and
there.
NVIDIA on the big three today. Thank you. Coming up next, we're going to spotlight the trends in entertainment industry, looking at
That is pretty smart.
and gaming, lodging, the theater space. Chad Baden's here from Macquarie.
Market Make Her instead of Market Maker. That's brilliant. Do. Waiting for another pullback, Rob.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
$59, $56, $90, $69.
Invest in ideas you believe in.
And then $56, $87, $64.
Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab Investing Themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Too big to fail. Have you set yourself up?
No,
correctly?
I haven't.
The old guard is saying, away off with their heads.
AI feels controversial and it's going crazy right now.
It is going crazy.
Well, the feds can't do everything.
So what does all of this mean for the market?
As long as people want to buy it, the price can go up.
Oh my goodness, the Fed cannot do everything they used to do to save this market.
Instead of taking cues, set the cues.
Again, he was wrong. The feds came out yesterday and saved the market. Okay, here we get. We just triggered my support level. We just now triggered my support level, folks. Prepare ye in the name of the Lord. Rob, we got one more to go. Okay, get ready. It really needs to hold here, so I'm going for it. Come on, baby. It's kind of risky right here, but I'm going for it. 230. We just triggered. Oh. Got a hold. $2, $2.30 and $2. But I think no, 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 no. Well, $2.60, baby. We're on the VWAP on the SPY. Magnificent. No. 270. If we make the 63, this could be a major breakout. If not, I need to sell it. What do you think, Yoko? We're $3. 310, baby. $320. We're at 310. Another win. So the ones that are new in the room here, we're at 330. So we did what I call the beach trade in the morning, where all the momentum and all the volatility comes in. Where it's very busy. There's a lot more volume. And a lot of traders are done for the day after we hit 11 o'clock Eastern time, 10 o'clock my time. That's why I take lunch at 10. Now we're at 350. Bingo. So we're at 350. I'm loving this. Yoko, did you take it? No. I'm out. We could go higher. Amen. Yeah, I do. I scalp put plays, but not as much as I do calls. Amen. Grundy. I just nailed it. Nailed it off to 200. I'll go ahead and take my grade now, Yoko. I waited and I waited and I waited and I got it.
No soup for you.
No soup. How dare you? Oh, friend says, got your music mic back on, baby.
Oh no.
You're jamming out.
You know, it's a TV show, and my kids love it. Sorry about that, guys.
That's all right. The slurping was so unprofessional, I know it. But I can't help it. I love making love to my soup. Yoko, I'll take a good grade, please. George.
Piper Sandler with a downgrade. Some of your thoughts on Rivian?
Well, I mean, it's an exciting name, and there's a lot of popularity for the vehicles, but for Rivian, there's
Rob, I'll take a
some
good grade, please.
challenges, and really, at the end of the day, Nicole, the problem for the car or the business or as an automaker is they've had production problems. They're really stuck at around 50,000 units. They can't achieve scalability or lower cost per units because they can't produce more of their trucks and SUVs. And
There you go.
There's some policy risks associated with not just the tariffs, which can certainly.
Yoko has too big of an ego. It's hard for him to do. God, look at there, $4.
Last year for $6.6 billion. So there's still some policy questions about that conditional law, which
No, it wasn't.
based upon
It was
some
perfect.
changing, decisions from the Trump administration. So with that said, Piper Sandler's downgraded the stock. They do maintain a neutral from an outperform, and they lowered their price target from 19 to 13. And there's also, again, some other challenges because they can't produce enough vehicles. They effectively are burning through money. And I just went back and looked at their income statement, and they generated last year basically around $5 billion in sales, but they lost around $4.9 billion, to which they have to finance those losses. And so if you look at the market capitalization of the business, roughly $13 billion, they have to finance close to $5 billion in losses. This implies a negative earnings yield of about 36%. So that's why the stock is down over the last 3 years by about 75%, and even year to date, it's down about 18%.
Okay, George, quick on the trade. Let's take a
Oh,
look at
yeah.
that. People want to know how to trade this.
Yeah, I do puts.
Example trade.
Yeah, so they do have a lot of.
But right now I'm bullish, Francisco. So I just kind of wait for the support and jump in on the calls. But maybe one put out of every 10 calls, maybe. I'm more of a call guy. I'm always bullish.
Or $250 a contract.
Sometimes it catches me too. But my trading, my strategy changes throughout the day. I always break it down in periods of time, like the beach trade is the early morning or the morning, then lunch trade, and then consolidation trade, and then power hour.
It's earnings after the bell today. We'll get you set up for that. Trading 360. We'll be right back.
It's time to look forward.
Find the next trend.
Okay,
Every click,
well,
every tick.
There's no fear of missing out.
wait
on
for
the
another
next
one.
trend.
Available anytime, anywhere, on any device for free. Empower your portfolio with the Schwab Network. He's Alex Coffey. I'm Jenny Horn. Join us for Next Gen Investing.
1 p.m. Eastern, only on the Schwab Network.
it's time for a song. Today's song will be, you're going to really love this one. Prepare yourself, Mike.
Affirmative.
Some of you might have had a job here at one time when you were a teen. Ooh, yeah. Working at the car wash, yeah. Sing it with me, baby. Car wash, yeah. Car wash. Whoa, whoa, whoa. Dishes keep on coming. Punk, you might like this one. Yeah. So I think there should be a poll made. Who loved that song?
And it is growing a lot faster. And that, for instance, last quarter, Micron told us that they saw the market at being about 16 billion for that high bandwidth memory for the entire.
Because when I worked at a dishwasher, we turned that song into a dishwashing song. So I used to go, working at Calvert's. Those dishes keep on coming. Work, can work. Work your fingers to the bone. Work and work. Oh, where was the Calverts?
Probably lagging both Hynix and
So that was 15 when I did that song and wrote that song. And we used the car wash music. And we used what's his name? The werewolf guy. I can't remember his name right now. Too many joints in between.
PC demand slower, but let's hear what they have to say and how much of this is really, AI driven. Eric Ross, Chief Investment Strategist at Gascend. Thank you, Eric. That's going to do it for us here on Trading 360. I'm Nicole Petalides. I'll see you at 2 o'clock. Fast Market.
So we pulled back again. Yeah, I think we just need to kind of be patient and scalp fast if you're in trades. That's where I am right now. We're coming back down to support again. I don't know if I want to take this risk or not. Not sure how this market's acting too much. We did call that one out good, so. And if we can keep a higher low here. Here we go. I got it. Take that trend line right there and run it to right there. No, we broke it. So it's going to come back and land off the 200 again. What do you think, Rob? Should we take the chits? Chits. Yes. How many contracts did I have on Tuesday? 5 and 10. Or work contracts. Oh, the big one. No, that wasn't yesterday. That was Monday. Okay, this is it. Is this it? Oh, today's Thursday. It was Tuesday. I had 34. Had 30, no. Had 32. I think this is it. I'm going for it. I'm going for it. $205 to 57.25s off the 200 SMA. Wake up and smell the coffee. Prepare ye in the name of the bounce. They're at 245, 250. I can get out here and be happy. We're at a major resistance. So people that are new to my strategy, I use moving averages, chart patterns, and being in the now. And I use that pair of legs right there. And when I see legs like that, I want to stay in the trade. Break it. I could get out right now at 250, 260. If we break this resistance and get above the 9, so the 200 SMA, if it's new to my style of trading, is one of my strongest supports. And right now I'm at 265. So that's easy 300 bucks. And I got $1,000 in this, just a little bit over 1,000, 1,025. And that's 25% gain right there. So I'm going to sell it just to show you how easy it is at 255. Those dishes keep on coming. Work and work. And Rob, I got one runner. I mean, not Rob, but Yoko. Winning. We're at 260. Ooh, yeah. And I would advise anybody that's new to my trading style of trading just to watch and learn and then start to pick it up. Don't go right in there and start digging in like I do. You got to know why I'm doing it. Ain't that right, Richard? Nixon, are you still here? No. Richard. There's 275. A big old fat candle came in there, didn't it? Yeah, but Yoko, I don't try to use over $1,500 at a time. Mr. Hickey.
Using that data in a comment. He goes, he did comment on it, but he doesn't use that any more than he uses any other data point. He actually pushed back on a reporter that asked him that exact same question. He said, we don't use that data any more than we use any other data point. But it is something we look at, but then we don't use it anymore. And then the other word, transitory. Okay. Why should a Federal Reserve chairman shy away from using a word? Does that trigger people? Because here's what happened. Last time he used that, the difference between the last time he used that and this time is 4.8 trillion in government spending after he said that.
Right.
That's what.
No, it was more like
And then they blame
6.5
him
trillion.
for using the word transitory. Here's what's not going to happen this time. You're not going to have 4.8 trillion in government spending, and he's talking about the possible bump from tariffs.
He's a liar. It was 6.5 trillion and 2 trillion over budget each year.
He chooses to use that word, and I applaud him for going back in there and throwing that in the face, because you could see the people twitching when he was using the word transitory. So
Yeah.
I think he did it as a little bit of a joke, frankly.
Yeah, I think that's a good thing to highlight for,
That's one thing Powell couldn't keep, or whatever her name was. Oh, damn, I already forgot her name. The one with the green teeth. What's that Fed's woman name? The little fat chick? Janet Yellen. Smelling Yellen. Transitory. It's only transitory. And they never would mention that the government is overspending. If that's one thing that these people on CNBC don't understand either. We're not fighting that problem right now. We're actually trying to rein in the budget. That's why we created Deutsche. It's 100% like the guy that said yesterday, that Fed guy. He said he approves Deutsche. Doge, whatever, D-O-G-E.
We're only slightly up, so these are choppy markets, and I expect the choppiness to continue. But where do they end up is what I care about, Tom. You and I are used to choppy markets. We've been dealing with them our whole life. But here, Tom, did you see the breaking news right before we came
are
out
we
the
at 566
EU
yet?
Pausing the whiskey tariffs.
Yes.
So April 2nd, you're right, is coming. But as we get closer, you can bet they're negotiating behind the scenes right now to alleviate those tariffs coming on. And that announcement that they're pulling back on those whiskey tariffs means things are starting to move in the right direction, Tom. I think you should see that as a real positive.
I don't think you get it, Yoko. I only add to the dip because it's extra. We still break my resistance level.
Is the fact that those countries all tariff us and our products. So you have to keep that into consideration when looking at this from a market perspective, because that's the way that we look at it, Kevin, is that how does this affect markets? How is this going to affect the economy? How is this going to affect consumer spending? Well, hey, if there's no tariffs from either side, which is the goal here, then, inflation should be transitory, right? And that should be beneficial to the consumer in the long run.
What you'll hear on this show is what you won't hear anywhere else, or very few places, which is the goal of all these tariff talks is for these other countries that tariff our goods and services to remove them. Mm-hmm. That's the goal. And the pressure will stay on them till they remove them. Also, he wants help on the borders with fentanyl and immigration. He's getting that. I think you're going to see something happen with that. And then there's the China problem, which is its own problem. They can't export their cheap goods, which are cheap. Why, Tom? Labor, almost slave labor that they import. Then they export, we import to our country, and they try to get their growth from.
We're at another support right here.
Trump has to get the Trump administration has to get a hold of that, the dumping of their goods on us, and then the border, fentanyl, and the tariffs from Canada and Europe. When those get resolved, the end game will be better trade policy for this country. Might not be for Canada, might not be for Europe, but it's better for the U.S., Tom.
Yeah, I think when you look at the flux that it creates, though, the tariff headlines.
I think we're at a pivot point, but I don't know. Yeah, it's at a pivot point. The double top. So if I go up and just buy one contract at the 5,700, and that's at 660. So the 5,700 is at 650. And also when you trade that, when I trade like the SPX, you can also trade the SPY. They run almost identical. And the SPY right now is on the VWAP. So I'm up $100 on just one contract for 650, the 5,700. And the SPY, I can start calling out the SPY. I just like taking bigger profits on the SPX.
Macro sets up well for stocks if
VWAP in the 200. IWM has a double bot. Oh, that ain't IWM. That's SMCI. Yeah, the QQQ would have been a good one this morning. Randy, did you look at APDN? It went below my support of 199. I really like this spot on the SPX, but it can easily come back down here and do a triple bottom if it doesn't hold this support. You think we're going to pull back more?
Demand or macro trends. They see headwinds from an overall compressed peak season along with one more month of its unwinding of the U.S. Postal Service partnership. They also noted the likelihood of FedEx's Drive program, which of course is expected to create permanent cost reductions of more than $2 billion. They don't see that being as helpful as expected in the third quarter. So they kept an underweight rating and a $200 price target on shares. That's $49 lower than where it's currently trading. But Morgan Stanley is only one.
Well, we're flagging out here, Rob.
On the street, so definitely
We'll know in a minute.
Bearish side. In terms of the outlook for the current quarter, analysts looking for EPS of $6.83 on revenue of $22.2 billion. That's less than 0.5% increase from the year-ago period, but still growth. And then for the full year, we mentioned FedEx already lowered its outlook, expecting adjusted EPS of $19 to $20 a share, somewhere in that range, and then approximately flat revenue year over year compared to the prior forecast of low single-digit percentage increase. I will say that Citi also weighed in ahead of the results, saying, from conversations with investors, the big debate seems to be whether FedEx will further lower that full-year EPS range of $19 to $20 per share.
So Nike, when are earnings coming out?
Investors seem fearful of the potential impact of tariffs and increasingly concerned about downside risk to consumers and industrial activity. That being said, despite investor concerns, Citi actually kept a buy rating on shares of FedEx, lowered their price target to $317 per share from $347. So a kind of differing takes between Morgan Stanley and Citi, a bull and a bear, heading into this
320.
Heading into this report. But it seems like there's some optimism based on today's action. Shares, as I said, up a little less than 1% heading into the print.
Yeah, one thing we know, Tom mentioned, Caroline, that this stock moves on earnings, but the Earnings trends are not great. The cyclical risks are not great. The bearish momentum on this stock is
FedEx.
not great. That being said, it's a fairly healthy company. Their balance sheet is good. You mentioned the Drive initiative that is bringing down costs. They're also, remember, spinning off the freight division, but not till mid-2026. That could increase the value of the company as the pieces get broken up. But I wonder why, Caroline. I'm trying to think like a consumer. You look at UPS, the chart looks very similar, right? As both these companies have gotten beat up over the last 6 to 9 months. Why are these companies struggling? Because by valuation, they're starting to get pretty cheap, but they can't seem to catch a bid, Caroline, despite you just mentioned one price target $49 lower and one $65 or $70 higher. The street's all over the board on this name.
Yeah. Although I will say, to that point, largely bullish. Those two calls were very different. But if you take a look at the analyst breakdown, 64% of analysts rate FedEx as a buy. So the majority in the bull camp, the other 30% in the hold camp, and then only 2 sell ratings, as I said, with Morgan Stanley as one of them. The median price target is $316 a share, so considerable upside from where it's currently trading. In terms of why these companies have been unable to catch a bid, I think that, it seems like they've really just been trying to stabilize since that pandemic rush where everyone was ordering everything from online. I mean, in my household, we're still ordering everything from online, although predominantly Amazon. And, but it seems like it's just all been about the stabilization. I will say we have heard from other analysts heading into the print as well who are bullish for some different reasons as well. Truist initiated FedEx and UPS actually as a buy, saying we believe that FedEx and UPS's growing retail footprint across the country provides them with an edge around handling returns, as well as third-party logistics services for small and mid-sized businesses. We saw Deutsche Bank also initiate FedEx as a buy recently as well earlier this month, saying that the company still delivers significant shareholder value, so initiated it as a buy with a $337 price target. So different reasons for bullishness, but we'll have to see if FedEx pulls through with these numbers and if they actually deliver that very modest revenue growth. And I think also outlook really is going to be key after slashing it. Maybe they have something better to say, but there are reasons for uncertainty, especially with so much uncertainty around geopolitics and tariffs, and a consumer that could be pulling back.
Yes, consumer exhaustion, but then you still have that put that's built in from the spin-off of FedEx Freight. That's going to probably come into the call, because that's why the stock rallied last quarter despite cutting guidance moving forward here. All right, great stuff. Thanks, Caroline Woods, senior markets correspondent here, helping us break down FedEx. But Kev, I'm going to get into an example trade in here because the option market pricing in a pretty hefty $20 move either way in the shares on this one. So implied volatility levels pretty elevated on this name going into the report.
Is it time yet?
Right now, current IV percentile about 63%. So nearly in the top 1/3 of implied volatility levels that we've seen over the last year. So I looked at something, Kev, where if the stock goes up, it's going to be profitable. The stock stays where it is, it'll be profitable. But then if it goes lower, just a little bit, you get a little kicker where it's actually going to be more profitable. I looked at an unbalanced put butterfly here, Kevin, that I
really like it here, but I don't know.
So going out to the March 21st monthly cycles, so just over 24 hours till expiration on this one, really short-term positioning. Buy one of the 240
We're below my
strike
support.
Puts, sell two
It could be a
of the
fake out.
235 strike puts, and then buy one of the 220 strike puts. And you're collecting a credit of roughly about $1.50 on that. If you collect $1.50 credit on that one, takes your break even where you start losing money down to $228.50 to the downside. So you want the stock
Go
to
put
be
a robe
above
on. I'll be right
that.
back.
Just outside of that one standard
I missed my
deviation
chance
move
there.
that you're looking at here. But Kevin, when you look at this, you're like, oh, okay, if the stock
It was
goes
cheaper,
higher,
a lot cheaper.
I only get to keep that credit. But at the same time, we've
Yeah,
seen
we're still
moves in the
we're
stock
still at my
that
trend
go
line.
Lower.
We ain't
That's
broke
where
it.
that kicker comes in at that short strike on around 235, right?
Right, 235 is the key price here. But this is what I would consider a counterintuitive put butterfly, right? Because it's a put butterfly that has long deltas. because really the majority of it is that short 235, 220 put vertical. There's the risk on the trade, is that $15 short put vertical. Before it gets there, you've got a long $5 put vertical. And if it meets at or around 235, you put it out for a credit, you take it off for a credit. That's the dream on a trade like this. But remember the risk. It's basically the $15 minus whatever credits you do it for, Tom. That's the risk on the trade. It's all on the downside.
Yep, $850 in risk, but that's below 220 on the downside, as Kevin mentioned. Now, if the stock goes up, rallies above 240, or stays above 240, excuse me, you just get to keep that credit. So it's limited profitability on the upside. I think that's one of the key things on this one. But if the stock does slide about that one standard deviation level, around that 235 level, maybe a little bit lower, your break even 228.50 to the downside. So you've got some cushion before you get to where this example trade starts to lose money on this one on the downside. So 3 out of 4 scenarios, you can be profitable. If it goes higher, stays where it
Didn't
is,
hold.
goes lower, but remains above.
They walked away.
50.
I think we're in more trouble.
All right, so good look at the unbalanced put butterfly for credit.
We're coming down more. We got earnings tonight with FedEx and Nike. We're at the 5,700 at $3. I'm not in it yet. I'm not. Making me another thing of hot chocolate. I got no sugar hot chocolate, so I can drink as much as I want. Well. You know, you got me to thinking. I love trading the SPX, but I can trade anything. So if there's I guess what I'm trying to say, if there's another way you'd like to see me trade, I could do it. But I just like making a lot of money on his SPX. And there's not, and I don't tell hardly anybody to cost average down. I usually tell people to set a stop loss. But, I did that for many years, and it took me a long time to realize that to try to get out of trouble when I'm in a trade, like a bad trade or something. So I got to where I started adding. And I had a limit of like one contract, and then if I cost average down, I'll buy another one. But now, I'll go to like 5. I'll go in and start at 5, or depends on the price. If it's a $500 $5 contract, I'm only going to buy one. If it's $1.50, $2, I might buy 5 and hope it bounces from there. But if it doesn't, and I get stuck and I can get it for another 20 cents cheaper, but when I first started trading, people used to say, everybody used to say, don't cost average down. It was a mistake. Don't do it. Don't do it. And I listened to them. And I lost a lot of money by doing that. So I started, traded with another girl that I traded with for a very long time. And I'd get out of a trade and it'd dip, you know, fortunately. And then by the end of the day, the thing would be way above my resistance level from where I got in at. And I just kept being stubborn. I wouldn't cost average down, and I'd get out of the trade and I'd take a loss of $100, and it just kept adding up. And so I started, if I thought I was at a support level and I'd get into a trade for, let's say, $3 a contract if it was the SPX, and I'd trade penny stocks for 15 years. Or about 10, so it really took about 15, well, 13, 14 years. And then I had enough money where I could start trading big caps. But I was trading micro pennies and penny stocks, and I was trading anything below $5 was my limit. And then I created scans that would go from 50 cents to $10, and I started trading them. And then I did that for years, and then I started trading with Vegas, and her and I were penny traders, and then we started trading bigger caps. And then she got me talked into, it took her 2 years to talk me into trade options. And I was making at that time, my limit was $300 a day. If I made $300 a day, I was very happy. And my stop loss was at 100. If I lost over 100, I'd stop trading. And then once I got better, I started realizing that I might have a bad trade in the first part of the day, or might have a bad trade, and then I was able to paper trade and figure out, well, hell, I can make it back. If I'm down 100 and I took a $100 loss, I could wait a little bit and get back into it, and I could get into another trade and it just start running up. So I'd make my 100 back plus. And I had a limit, I always had a limit of, back then I wouldn't trade more than $500-600 at a time to 1,000, and I might only have one chance to make that trade work. And I kept adding. Every time I trading options, I went through probably $5,000-10,000 before I figured out how to start trading options and make it easier for me. And then when I started this strategy here with a sneaky snake, I didn't start cost averaging down until I started this strategy. And I realized it kind of rung, I was getting winners every single time. And when I was in trouble, I'd end up, 1,500 was my limit. No matter what, try to trade it. If I could only take one a day, I'd have to have a limit of 1,500 to go into a trade. And I could buy contracts for $1, buy 5 at $1, and then buy 5 more if it dipped down. Or maybe if it dipped down to 50 cents, I could buy 10, and I'd end up with 15 contracts. And try to keep it in that $1,000 to $1,500 range. But I was always looking for the closest to the money that I could get in at $1 that had high volume. And then I started making, last year I had a goal to make 1,000 a day. but I still wanted to keep it at that $1,500 limit. And then there's times where the market where I'd do it every day. Every trade I got in was a great trade until we started getting into volatility, and then it started getting tougher. And my losses, and I started had to put more money in it. By the end of the day, I could have 30 contracts at $60 a piece and have $1,800 in the trade, but start out with one contract at $370, then buy another one at $2, and then buy, if it dipped down to $150, I'd have 2, so I'd buy 2 more, and I'd have 4. And I kept farther down it went. If I got them at 25 cents, I'd buy 20 of them. So I only had 4, and then it went all the way to 25 cents. And, by that time I was either lose it all or take a big chance and buy
Fascinating.
40 and have just like $500 in a trade, plus the other 500 that I had in it. But I'd end up with 40 contracts, 50 contracts, with an average of 40 cents, maybe 50 cents a piece. Man, my throat's been bothering me lately. Time for another Listerine. But there's been, here lately, when the market's more volatile, I catch myself in the wrong trade, and I just have that. I've won so many times by cost averaging down, I don't want to take the losses anymore. I just want to wait it out. And very seldom do I get stuck and have to go, okay, I've lost, I can't win this one. Like right now, we got a snake here with a double bottom, high or low, with a hammer. But I want to make it to where, however I can make a small cap a better trader. I got to learn how to maybe trade different, call them out differently. Or I just keep doing what I'm doing and just trying to teach you chart patterns and where I think the best place to buy, and then you kind of make up your own mind. But I traded pennies for 14 years. I can go back to trading pennies, but there's a lot more risk. Sometimes you have to wait a week maybe for them to finally do their thing, but I got to think, I got to think about it.
On this one, Kevin, how do you want to look at it from an example trade? Because you know what, they disappoint and don't give any confirmation, or like Landon said, they've got to give some good news here on something to get the stock going again. But at the same time, the bar's already pretty low, right?
Yeah, Tom, and I agree with everything that Landon said except one thing, which is don't think that this stock can't rally. When the bar is this low, it doesn't take much. It's
Right.
one thing that can turn this stock higher, Tom. And so that's what, especially with a low bar, if this new CEO shows any promise to the future or any good news on inventories, things like that, there's a lot of things that can send this stock higher, Tom. Looking at a trade in this thing, go ahead.
No, go ahead. With the example trade, I mentioned expecting nearly a $6 move in the stock.
Yeah, exactly. So
Well, we're squeezing. We'll know something here second.
Between the front expiration.
Still got 45 minutes for the fat cats get back. But we're definitely at a support level here. Go-To used to be one I used to trade a lot. Ah, darn. Quantum computing, QBTS. Tiger used to be one that was one heck of a trade. Where's that? This one's good a scan that I used to use. Come on, what's going on here? Okay. What's going on? One to two. $0.50 to so PSTV Therapeutics shares are trading higher if the company announced an FDA accepted the name Riobic. Oh, I'm getting my hot chocolate. SPY pulled back to support level. I'm not sure if it's good or not, but it's 61% pullback from the top.
Any device for free. No place better
Do do
than the
do
Schwab
do
Network.
do. Blind used to trade that one. That's got a good run. Shares of software company are trading lower. Oh, that was on the 13th.
Welcome back to Fast
Reported
Forward here on
soft
Schwab Network.
guidance.
Before we take,
Okay.
no, we're actually going to move.
I don't want to trade that
into,
one in.
Micron. Stocks are now negative, though. I just wanted to mention that, so keep an eye on those.
Stocks are negative.
Earlier, we're talking Micron. Stocks down about 34% from those all-time highs that we saw just about 10 months ago in these shares. It's been really choppy over the last several months. Let's bring in George.
Because of
Tillis,
bad
senior market
accounting.
contributor here on the network. George, you know, some positive commentary on NVIDIA at their GTC conference about, you know, Micron and the amount of memory needed, but it seems like where one area in their business does really well, the other area is still lagging at this point, right?
Yeah, that's the thing. It's sort of push and pull for Micron, and the really the areas that have lagged have been the areas. I mean, we've talked about this, you know, resurgence in this computing cycle, personal computing cycle that Micron supplies their DRAM.
NVIDIA's having a hard
That's
time
really
breaking
where the
resistance.
languishing aspects of their business lie. The high bandwidth memory for the data centers and the chip architecture, including you know, the Rubin technology that was announced by NVIDIA. Also, of course, the Blackwell technologies, that's still been growing for Micron, but they are facing, you know, competitive challenges, and they are, you know, one of the three larger global manufacturers of DRAM
Be careful, Rob.
technologies, including Samsung and SK Hynix, the two Korean companies. But nonetheless, you know, the stock, if you look at it, it's not trading very well. It's stuck in a trading range, like you mentioned just a moment ago, about 6 months worth of a trading range.
MU.
Around 85 on the low side, 110 on the high side. So eventually it's going to break out of that range. We just don't know which direction.
That's a different one.
But, you know, it will be quite meaningful.
What do you
quite
mean?
powerful
That thing's
once it
up.
does. If you take a look at the EPS estimates for earnings, they're expecting a robust number, $1.42. Estimates, that's higher by more than 200%. Last year they earned about 42 cents for the same quarter. Sales are expected to be really robust at 35% higher, 7.9 billion versus 5.82 billion for the
We
same
hit triple
quarter
top.
last year. And what's happening here is every time you know, the company's trying to make some progress, the estimates for the current fiscal year keep moving down, but they keep pushing it further out into the future. And the reason I say this is if you just look at the fiscal year 25's earnings estimates, $6.76. In and of itself, it's trading around a 15 times earnings multiple, and that's about a 5-year average, roughly speaking. But you go all the way to next year, 2026, they're expecting over $11, forgive me, and 12 cents. That's essentially a very significant increase in estimates for fiscal year 2026, and that's around 9 times earnings. So we're sort of stuck between these two fiscal years, and at some point in time, you know, assuming the fiscal year 26 numbers or estimates are roughly in line with what will happen, that suggests that this stock may end up seeing some pretty significant pickup. But that won't happen until it breaks out of that trading range, and it certainly could on earnings, but it certainly could not, and it could take another quarter or so.
Yeah, George, I think you and I read the same article. I mean, the earnings per share reaching 11 to 13 billion by fiscal 2026 sounds pretty good, yet the chart doesn't show any of that, despite the fact it is showing some promise up reaching near their 200-day moving average, which is about, what's the number, 104. So it may be on the verge of a technical breakout here if it were to do it. But George, this is a stock. Why does it, every time we talk about Micron, we talk about how beat up it gets. When it's in a downtrend, almost like a commodity, like a cyclical commodity. And man, when it's in a downswing, George, they punish this stock.
It is, and that's the thing. I think you bring up a good point. I mean, if you talk about cyclicality, you got to look at, especially these core memory manufacturers in the semiconductor space, extremely cyclical. I mean, they're cyclical because of pricing, inventory, and then you have to think about, in the commodity space, corn 1 year is going to be the same corn the next year. But if you think about the technology aspects of, memory, old memory is not as good as the new memory. So they're facing inventory adjustments from year to year as well, as alongside the technology change, more productive chips. And so they can run into inventory mismatches. So that adds to the cyclicality of these companies. And so with that said, this is certainly one worth watching. I think that technical level, the 200-day moving average, obviously is going to pose a technical challenge for Micron. But once they do, and I'm talking about a lot of these semiconductor names, particularly those
thing called any of them, and those are worth a lot. Especially when you consider that they're pretty set up to be successful into the future. I mean, their best players just got huge deals and are now locked up for some period of time.
Yes, and to further your point, Scott,
I don't care much for you.
The moving average been acting as resistance, right? That's George Tiller, senior markets correspondent here, helping us break down Micron into earnings. Kevin, the option market on this one, pricing in about $9.60 move either way in this one. IV percentile rank about 63%. So, elevated going into this report. So I looked at a strategy. George mentioned maybe it breaks out to the downside, maybe it breaks out to the upside. So my example trade's taken in, same thing with your calendar, but I'm going to use a call diagonal where if you think this stock's going to go higher, take advantage of those vol dispersions in here. So just really short-term positioning here, Kev, same as your calendar, going out to the March 28th weekly cycle that expires in 8 days. Buy the 103 strike calls, that's at the money. And then against it in the March 21st weekly or monthly options that expire tomorrow, sell the 112 strike calls. So a bullish $9 wide call diagonal to the upside, paying roughly, we've got 420 debit on here. That's where it was trading earlier. It's trading closer to 380, so you're going to actually get it cheaper now. But if you pay that 420 debit, or the debit you pay is going to be your risk on this, in this example, $420 in risk. Anything above, most likely that 105 level is going to be profitability on this one. But Kev, this is definitely a bullish trade. You do need to move higher to profit on this one, but you don't need it to explode maybe 10% or something to the upside to get to the apex of that profitability, which is about $9 higher than the current share price.
Yeah, it's easy to figure out what you did here, right? You bought it at the money 1 week, 8 days out, the 103. And then you looked at the expected move 1 day, $9, sell the 112, right? Use the Thinkorswim platform to help you with your strike selection. And that's what you did there. Yes, but it is a bullish trade, Tom. You need to get through that debit level to break even on the upside. So this is one that certainly looks for a breakout of that 200-day moving average, and the risk is whatever the debit you pay on this trade, Tom.
And offsetting some of the costs on that, because the bullish part of this is buying the March 28th, the 103 strike call. Then you offset some of the costs with that higher implied volatility in the March 28th weekly options, or the March 21st monthly options that expire tomorrow, that 113 strike level or 112 strike level. Offset some of the costs. That's nearly $2 in option premium on that call that you're selling against your long bullish call. All right. Don't forget, you got some assignment risk on that short call also over the next 24 hours. That's going to wrap it up for us today here on Fast Market. But stick around right here on the Schwab Network. Next Gen Investing is coming up.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, our analysis is your blueprint for the day. Bonds, stocks, across all asset classes. On Morning Trade Live on the Schwab Network. Weekdays.
Hey, Dad. I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Maybe.
Whether you're a bull or a bear, you'll want to catch the latest market action on Morning Movers with me, Diane King Hall, live from the floor of the New York Stock Exchange, only on Schwab Network.
Oh, gosh.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
I'm thinking it might go back to green. We kind of hit a bottom here.
Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, right now, markets giving back a lot of the momentum we saw on the back of Fed Day yesterday.
Yes, it is.
Like there was a collective sigh of relief yesterday to close out the session. That has not been able to hold on to today as we are lower in now 3 of the 4 major indices. The only real, I'd say, bright spot is putting it more maybe optimistically is the Dow, which is basically unchanged on the session.
Hello, Link.
But pulling back from session highs here, another relatively quiet day as we are earnings light and also economic data light today.
Yeah, agree with what you said. I think the only thing I would add to that is that the market is just not in a trending market state. We're in much more of a choppy, range-bound state where there isn't several days stacking together.
Yeah, a message from the IRS lady.
This is much more of a back and forth battle, and it's different than we spent, much of the last 2 years. And so recognizing that and adapting kind of expectations and strategy to better fit the current condition is probably going to be prudent. But when you look at the market today, it's been up like 40, 50 points, down 10 now. It's well off the lows from, before the open, as well as there was some, tariff chatter out of the EU overnight where we actually saw the market like 40 points lower. So big range again. But Jerome Powell's, statements definitely didn't set the market back. And so I think that's an important first step.
Yeah, and I even thought it was very encouraging that he was basically like separation of church and state. Like he will not still comment on the political ongoings. He said that he's been asked many times about like what the future of the Fed's independence from the U.S. government looks like, and said he would not be also giving any more commentary on that. There was a lot of things I liked that he had to say, as well as recessions just being at this point statistical events that he doesn't find very probable in this current market. So there was definitely a sense of optimism not being read through today, but not seeing a massive repricing to the downside either. And I agree, Alex, I feel like this is just now the nature of 2025 thus far, which feels a bit unusual when you've known nothing but every bit of selling being bought up. But as always on the show, we'll step away from the overall macro conversation. We will be diving into some earnings movers as well as some overall autos to kick off our show. We'll also be discussing Micron, which does have its earnings out today after the closing bell.
We break
Clearly one of the
56.67.79.
saying that, but Micron actually is. We'll also be discussing
And SPY's definitely hit that
following
pullback
some
on the
turbulence
Fibonacci.
surrounding Siri being delayed. And we'll close things out again with another earnings preview. Carnival here with earnings out tomorrow morning.
We got a 1, 2, 3 here.
Let's start here with sort of the lead of all
And 2, 3, 4 maybe.
which is Tesla, of course. I endorse
Got a falling wedge.
on our upvote downvotes here, but let's talk Tesla, because although the headline will read Piper Sandler price target cut, I didn't read that note and think bearish take. I thought it was a pretty optimistic
Not much of a
look at
falling
Tesla.
wedge.
But the stock's been heavy all day. It's still heavy, down $2.
So yeah, I mean, you see the price target cut from $500 a share to $450. So that would imply what now, like, say, now such as $216 of upside. I mean, this is ridiculous. So yeah,
it's a 10% cut in price target, which is notable. But yeah, I mean, overweight rating, 450 price target. It's not like this is a bear.
No, and they said that they highlighted 2025 delivery expectations, which they actually trimmed, saying Tesla's quarter-to-date trends may prompt others to follow suit. However, they said that factory shutdowns and the Model Y
put new battery in here.
right now changeover are the primary cause of lower deliveries. And also did say that the price target has no contribution from the humanoid robots or AI as a service. In other words, at now sitting just below $234 a share, they feel Tesla is actually cheap based solely on its space into autos, energy, and full self-driving. So they're definitely in the more minority camp, or I guess you could say majority of analysts do still have buys, yes, but there's definitely more and more of those converts into a more neutral or middle of the line rating here from the streets sense. I did also see a note out of TD Cowen, though I believe it was from yesterday, that highlighted they said in light of all of this negative press surrounding Elon Musk, surrounding people burning these cyber trucks, I mean, lighting them on fire, it's ridiculous. They were saying, hey, actually, the opportunity for a more conservative consumer is vast, and that could actually lead to an increase in sales. So it's not like the bad press you see isn't necessarily weighted to one side. You could see it benefit at least in the near term. And that's just obviously one way of thinking, or two different ways of thinking, considering Piper and TD Cowen today.
Yeah, I guess I think about it way simpler than both. This stock got way overbought. The 12-month price target at the peak was around $300 for a consensus view. It peaked out at 367, 368, let's call it 370. It's now sitting around 350, but the stock got to what, like $500 a share almost. So look, the stock just went way ahead of itself. It's now way overcorrected. And at least if you're Alexander Potter, I believe it is, over at Piper Sandler, what you say is it's overdone. It's now a much more attractive purchase here. But that's how it always is. Whenever it's really uncomfortable and kind of ugly and it seems like there's never going to be an uptick again, those are always the good buying opportunities. That's not to say that Tesla's a good buying opportunity here or it's not going to go lower, but I'm sure it didn't feel great in whatever it would have been, March, April of 2009 to buy stocks at that point, but you'd really be thanking yourself today if you did.
It's true, and that's such a good point. I think that a lot of times the best calls are made when it is uncomfortable and feels like you could be taking a bit of a risk, and that's just frankly guessing the bottom of Tesla. And every time we see one of these cycles of momentum that rises, it seems like it can't stop rising, and then we fall. And right now we're in one of those cycles where things can't catch a break. Modestly lower today, though. Now our next name today is also part of that same note out of Piper Sandler, same analyst that upgraded Carvana shares to overweight from neutral price target of 225. That does suggest about 28% upside from Wednesday's closing price. They said that they would use this recent sell-off to accumulate Carvana shares, and that they said that no stock in their coverage universe is as insulated to the threat of tariffs as Carvana. acknowledging that there's these macro uncertainties.
We
Yes,
test
they
the
say
old
that
resistance
company, after
line.
flirting with bankruptcy, is now in a position to grow. Specifically, their annual units sold, in their opinion, at least, should one day exceed 3 million, up from the 416,000 in 2024. And they said right now Carvana accounts for just 1% of the market, with expectations they could sell about 10% or more of the cars, used cars, at least in the U.S. So this is actually very much even simpler than their note on Tesla, because they are saying
Break to 63,
right now,
we're
opportunity
moving.
to buy.
Yeah, I mean, wow, does this one put my brain in a pretzel? I never thought we'd be saying Carvana is like this
$3.
stalwart, resilient part of the retail environment. And
Yeah.
look, I'm not going to say that I think that's necessarily the case or not, but that's sort of the point they're making in this uncertainty. At least the stuff that's uncertain right now may not impact a company like Carvana. But what a turnaround this company's had.
I'm gonna trade. I traded the SPX, the 5700 for. I got one contract for $3.
Particularly the ones listed in Hong Kong have gotten way more attention as of late. As you know, I've made the argument.
Thank you very much. That's really nice. Thank you.
US, and that money's got to find a home. Some of that money has found its way over to China.
Okay, and I have been, majorly asleep at the
Now,
wheel.
what the heck's going on here? Oh.
Because I've been following JD.com, PDD, Alibaba so closely, and Alibaba is the one I've been touting as like the leader of the Chinese stock comeback, or Chinese ADRs. I was not giving them proper credit to XPeng, which is now up 87% this year. I mean, this is incredible. I mean, I know the stock trades at $22, and it's all relative because we were beaten up pretty badly, but I just didn't realize this name's outperformance, frankly. I'm up 134% now on a 12-month basis, which again, smaller price tag, yes, but still, performance on a percentage basis is still really incredible. Now, news today from the street, Barclays actually raising its price target to 20 from 7 with an underweight rating, saying that their vehicle deliveries in fourth quarter and so far in first quarter are more than 3 times the volume that they are seeing now in the first half of this year, or last year, excuse me. So they did say their model now, with a refresh and new product launches with momentum strong into 2025. They did say that there's lots of good things to like. However, valuation at this point remains stretched after its recent rally in the last several months. So more of a valuation call, as a lot of these are. So they actually said perhaps the upside might be capping out here.
Yeah, speaking of volatility, up 23% in 1 month, down 6% today, down 12% in the last 5 trading sessions or 1 week. So definitely not for those with weak stomachs if you're looking at XPeng. Let's talk Uber. This is a fun one, a really important moment, I think, in the history of Uber is sort of right now, how they're going to navigate this autonomous vehicle, robo-taxi rollout from competitors and where they're going to fit in that world. I know the story today has nothing to do with that, but it's going to just be this cloud that hangs over this company. If they nail it and they hold their market share, huge windfall. They don't, who knows what's going to happen to Uber.
I know they need to maintain a lot of what they've been doing, because I do feel like there was at one point, it was a 2-horse race. It was between Uber and Lyft as far as ride hailing and dominance. And I feel like maybe this is just my own personal perception, but Uber has done such a good job now commanding. I mean, they are the dominant force of the ride hailing industry. They've shown Lyft now pretty consistently, but I also feel like from like a perception standpoint, I view Uber now as a much more reliable, affordable version of Lyft. So that they need to continue a lot of that, because that drives massive loyalty, at least from my very, I'd say, excessive use of both Uber and Lyft. But Darden today announcing they're expanding their delivery offering with Uber following a successful rollout. The two have a partnership through a pilot on-demand delivery rollout at Cheddar's Scratch Kitchen. They did say that this is now conducting pilot tests at 10 restaurants, allowing guests to order directly with the Cheddar's website and using Uber's app for delivery. So that's, I think, at least a strengthened relationship that we're seeing out of Uber. And I also saw earlier this week, KeyBank called Uber, as well as DoorDash, Netflix, and Spotify, all category leaders, maintaining all 4 at overweight. So Uber, actually, of this group of stocks, I think is our least volatile. We talked some volatile names off the top of this show today, but it has pulled back, while also still remaining fairly actually impressive when you look at its year-to-date performance, relatively speaking. We're 23% still this year.
Yeah.
when you think about what Uber has done to like solidify its role in this space, it's been a really impressive story, and it makes a lot of sense, right? Drivers were hard to come by, and so keeping them busy through rides, deliveries, giving them the optionality was important. The technology, the loyalty programs, etc. We've talked about it being cheaper in the major metros, but also quicker than Lyft. All of that was critical for Uber to establish the role it has now. But if other companies, be that Waymo, be that Tesla, be that whoever, come in and they can basically just eliminate the driver altogether, roll that out, and Uber's not a part of that discussion or not partnered up with them, Uber's not necessary. And so that's why Uber's going to have to strike those deals, figure out who they're going to work with entirely, and hope that they pick the winner. Because whoever wins that is going to basically, I don't want to say winner take all in this marketplace, but they're going to have a leg up on competition because it's a lot cheaper to drive a car if there's nobody to pay you that's actually driving it.
And I also think, like, from a consumer standpoint, it sounds a lot more enjoyable. But I guess maybe that's so wrong. I'm like saying the human element, take it away. And on one day, I'm sure I'll be wishing for the opposite. But yeah, I do think that this race for full autonomy and this race for some of these ride-hailing services without a obviously human component will be cost accretive, yes, but also kind of scary. So a world where
yeah, my ears bleed too when she speaks sometimes. I can't hardly, I don't know what it is about her.
Wrap up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform chat. Trade brilliantly with Schwab.
No politics, no noise, from bell to bell and beyond. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
Welcome back to Next Gen Investing. It's now time, of course, for our Chart Master segment. Joining us today is Rick Ducat, our lead markets technician for the network. And so first and foremost, we are talking 2 names that have autofocus. This is about as close of a correlation as I can make, but Carvana is definitely the more volatile of our 2, the other being Uber. Carvana has been one that's been on a tear, has pulled back, and this analyst at Piper Sandler is saying this is the buying opportunity now for those that want to be more long for Carvana. So walk us through this chart here because it's definitely an interesting one, to put it lightly.
There is a case to be made, I think, that we are at a important supportive area on this chart. So if we take a look here, we had our green line near about 165. We had a series of lows here after we broke above another previous high point. From there, we hit the same 165 area, and so far we've held the line. It was also fairly close to our purple 252-day exponential moving average, which comes in right around 175. So we did not have a big breakout below our long-term moving average, and we, for the most part, stayed above our supportive zone near 165 or so. So that's a rather interesting development here in this name. Nevertheless, we have not recaptured our old upward sloping blue trend line that was broken, despite breaking out of our more short-term pattern, this falling wedge type shape between our two white dashed lines. We also have not retaken our yellow 21-day exponential moving average just yet here, which comes in near 199. So still some work to be done despite an RSI breakout. Momentum pushing above out of that oversold area and breaking our trend line. We haven't taken out the 50 midline, but we are making new highs relative to our previous peaks. So some interesting developments here, Jenny.
Okay, and all that being said, now what are we watching here for some key price levels?
If we were to look at our standard deviation channels and our volume profile studies here, we can see that this area where we did bounce looks important here. It's the site of this node near about 175, so a heavy trading activity area lining up with an important technical indicator. So it seems like, kind of like I was saying, if there was a place for the bulls to try to take a stab at a supportive area, this seems like a logical area to consider. If we were to break down further, though, another consolidation area matches up with our point of control near about 124, 125 to the downside. To the upside, another volume node here lining up roughly with where we topped out today and our -1 channel and our 21-day EMA. So all that comes together right around 199. And just a quick look at a 5-year chart here. You don't see many charts like this. A very dramatic rise, very dramatic fall, and now we are making some astounding upside progress once again. Difficult price action though. We have a kind of a broadening triangle type format, price extremes moving farther and farther away from each other. This was kind of a notable price area to the upside near about 290.
I feel like this is like the entirety of the beginning of my career is this Carvana chart, because I remember when it was at $3
looking at
that
Carvana.
shared. It was painful. We were talking about bankruptcy, and now the turnaround has been frankly astounding, and I think one that many that were giving up on this stock wouldn't have
we
guessed.
held the
So, yeah,
support
an
level.
amazing 5-year weekly chart, and again illustrates how far we've come even if we've pulled back. So that being said, now looking at trading this name for
As long as we
example
hold
purposes, Alex, leaning into
565.65.
and we also saw echoed today by Piper Sandler.
Yeah, the Piper Sandler note gave you some runway for how this
It'll
stock
break
could perhaps
567.32.
from the tariff discussion and all that.
The VWAP.
I kind of look this
We
as
got to break the
a high
VWAP.
beta stock, and if you're looking for a high beta stock to make a move, typically they make
We break the VWAP, we're going back up.
Looked at buying a call calendar, selling next
To the
Friday,
200
buying
for
the
sure.
following week, so that's March 28th.
Right now we're in the middle of it.
April 4th, centering around the 215 strike. That kind of gets you back up into those levels that we saw not that long ago. If that were to happen, of course, this one will
Tomorrow's
work.
Friday, and we've got the big weekend.
Max loss is $200 then, and the nice thing, Jenny, on this strategy is it's very customizable. 215 was just an arbitrary, level that I saw on the chart that, perhaps it could be where this could go if it does move higher. But if you have a different target in mind, absolutely adjust that to better fit it, be that Carvana or any other name. But a mountaintop, mountain peak-like risk profile, so you know that the strike selection is really important, because that's where the apex of that profitability graph is.
One is our throwing in the dark strategies, isn't it? It's always how I think about this one. Yeah, so strike selection obviously customizable, but highly
trying to hit a bullseye, not just trying to hit an area, trying to hit the bullseye.
Which is, yes, I think most people's goal. I'm like trying to hit anywhere on the wall when I'm playing.
As long as we stay above this trend line.
You need to be a bit more precise. Now, next name today is Uber, and different story as far as volatility is concerned. We have seen
This is a VWAP chart, YouTubers.
Uber, turning around their overall.
That's your VWAP right there. We've been going straight across more or less all day today.
A lot to like when it comes to Uber here, especially when you look at the autonomy. So walk us through now this chart, Rick.
So yeah,
Doesn't show up on the SPX,
this
just a
chart,
SPY.
your outlook kind of depends on where you start looking here. If you were to start looking at more of a short-term price activity,
That's
then you can
gauging
see we
that.
have a downward sloping trend line that's in the process of being broken today. Price is pushing above the orange 63-day and yellow 21-day exponential moving averages at the same time that it's breaking out of this trend line. We still have an uptrend in play as well. But if you were to zoom out a little bit more,
We got 3
the
minutes for the fat
prevailing
cats
pattern
come back.
really is more like a symmetrical triangle type shape here, where we have two trend lines that are converging toward each other, starting at our extreme lows and highs. So really, it's a picture of shrinking volatility in the bigger picture here, despite this breakout. So that's something to keep in mind here. RSI also a bit inconsistent as well here. A notable period of divergence as price was making new highs. RSI was kind of not making the same peaks, just kind of topping out around that same area near 72 before our eventual decline. But now we are back above the 50 midline, not really a clear trend in play on the RSI. So a bit of a question mark, I would say. We'll see if this breakout takes hold, though.
Yeah, and I mean, this pulled back, I mean, about 14% from its highs, but remains at least well off lows by over 36% now. So when we watch some levels now going forward again in Uber, what do you see?
So volume profile can
Yes,
show
I
us
will.
important areas that perhaps were not apparent at first. You can see that this place where we are breaking out to the upside from also represents the point
Coming
of
down
control,
for a
the
triple
area of
bottom.
heaviest trading here. The price level near about 72 or so is an important technical point on this chart. This is also roughly the site of this solid blue line, our linear regression line, our line of best fit based on closing prices, our idea of fair value. So really around 71, 72, 73, this general area, there's really quite a bit of technical factors that would make it noteworthy. To the
Get
upside,
ready.
though, this red line here represented a gap and then some high points that we established. So around 77 would be an interesting point to watch. To the downside, then, we've got our 252-day EMA, our purple line, coming in just below 69.
Okay, yeah, and I will say another name that amazed me this morning where I didn't realize we've hung on to a 23 and some change % gain on the year. I know we're still down on a 12-month basis, but pretty unusual to say that whether you're exposed to autos or tech right now on the year. But appreciate it, Rick, for the technical breakdown. And now we look at trading this name, Alex, and Uber, a bit of a different story when it comes to Uber versus Carvana, but definitely volatile. Definitely there's been an added interest in this name in the last couple of years.
150.
Yeah, looking at some of the put verticals, you can see over my shoulder here in this name. Rick talked about those low 70s being kind of a congestion support zone. If that's the case, this one may work out. It's an April 72.5, 70 put vertical looking to collect 70 cents. You can make a max profit of $70 on a max loss of 180. Break even 71.80. So really hoping that that point of control support zone holds. It's the neutral to bullish version of this, Jenny. It's been kind of a sideways chart. If someone wanted to make this more neutral, you could sell a call vertical as well, make it an iron condor. But the story today, the Darden story, seemed positive, so looked at a neutral to bullish version.
Yeah, and I would say the more and more companies that they're able to continue to have these strong partnerships with, the better, because there's definitely a lot of options right now for these restaurants to choose from, and Uber seems like at least one of the standouts as far as their food delivery services. We'll leave it there, though, for Chartmaster. Now, coming up next, time to talk a name that still has earnings. Can you believe it? It is always earnings season if you're a believer, but we're looking at Micron, which is seeing actually a pretty decent momentum shift on this year after seeing some weakness in the high bandwidth memory space for the better part of the last 2 years.
Empower your portfolio with the Schwab Network. Schwab Network is available anytime, anywhere, on any device for free. Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Yeah, team each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange.
Okay, here it is. This has got a hold right here.
Only on Schwab Network.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills in the biz.
Actually, I'm seeing something from Schwab.
Uh-oh.
We're experiencing technical difficulties.
They can even manage it for you.
Not to mention, Schwab is a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical difficulties. Carl?
Schwab, a modern approach to wealth management.
Accelerate your market knowledge.
I don't know. I think we need to be patient.
Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hicks. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
We got an inverted hammer.
Welcome back to
And I got 56, 27, 69 for low support to hold, but can't remember how I got it.
Name that has seen some degree of volatility within the overall high bandwidth memory
Probably the
space,
50
as well,
SMA.
today, but also has seen a degree of, I'd say, definitely optimism trickle in this year. So we do know that when it comes to Micron, Alex, the same has not been a leader by any means, but a fun
Definitely
factor,
at the
you
bottom
look
of the
at
snake
actually
right
the
now.
100 sectors, and you see within the tech sector, there's semiconductors. This is actually the leader on a performance basis this year. So not making up a huge portion of the pie, but still at least one that's hanging on to a year-to-date gain.
Yeah, no doubt about it. This, I would say, kind of bookends the earnings season for the quarter alongside Nike. So there is usually a tension on this. It has, like, we'll put it this way. If Micron was in the same week as Amazon, Apple, Facebook, or Meta, Alphabet, all these
5680s.
names, probably wouldn't be talked about that
I'm gonna
much.
give it
But
a
it's
shot
the
here.
End of the quarter, we've kind of forgotten about earnings at this point, and then they kind of remind us, oh, there's still a few, more to get through.
We got quad witching tomorrow, so that's going to be
always the story
probably
it
what's
seems.
creating some volatility here.
Sometimes it's a good story, sometimes it's not. But earnings tend to move this stock. And I know that's not, some revolutionary statement, but it's just the matter of a fact when it comes to Micron. This is a volatile stock around earnings, and you look at it over history in terms of its performance around those earnings events, as I key it in here. Up, down.
We're at the
up,
63
down,
on the 1 hour.
16% down last time, 14% up the time before. Those are massive moves.
Yeah, and I mean, those are pretty massive moves here. So
Yeah,
now
that's where I
we'll
remember how I got
here
that.
on Micron, I'd like to welcome in Caroline Wood, Senior Markets Correspondent for the network, to give us more of a breakdown on that name. So Caroline, this is one
That was
of
my
those
first
earnings
support
walks through
there.
what we're expecting from this report.
Well, not my first, but
Hey
one
there,
of them.
Jenny. Not seeing any huge moves yet, but there is some optimism today heading into this report. The overall tech sector has turned lower. We've seen a lot of the
$3 to $3.80 again.
negative, but Micron holding on to
This is a 5680s.
heading into this report. And to your point, Micron's actually outperforming the stocks, the overall tech sector, even NVIDIA so far in 2025, and outperforming the overall market as well. Shares are up about 22% year to date, still almost 35% away from the highs.
There's
but,
another
I do
80
think
bucks.
that is important to note, up about 10% this month alone.
Off of
This
$300.
report, we'll expect to hear about AI. Of course, memory is a key component of AI servers. Micron is a memory chip maker. Memory pricing.
Right
Some
there.
analysts are citing price increases as a reason for bullishness. So we'll see what Micron has to say on that front. Inventory levels. We'll watch for management's discussions in terms
There's
of supply and
33%.
demand balance. We know that the consumer-oriented PC, auto, smartphone division has definitely been the weaker link. AI is certainly the more robust part of the business right now, for high bandwidth memory chips. And also risks around China and tariffs, of course. We'll be looking for any commentary there, any impact to the outlook. In terms of the actual numbers, we're looking for adjusted EPS of $1.43 on revenue of $7.9 billion. That would represent 36% growth from the year ago period. In terms of breaking it down, DRAM, which is of course using desktop computers and servers and such, revenue there expected to be up almost 50%, about 49% at $6.2 billion. We know, as I said, that high bandwidth memory chips are that key really growth driver. NAND, meanwhile, expected to be up a more modest 2% in terms of revenue growth at $1.6 billion. Outlook will be key because back in December, Micron actually disappointed when offering its quarterly outlook due to
snake breakout. Here we go. We're going to find out number 4. Coming up to resistance. Boom, baby. Boom shakalaka. Go grab me some more water. Tesla's green. Up $3 from the last time I looked at it. Alerted that double bottom. I got CCL today. I just think it's too high. Well, we broke out of the snake. Number 4. Might make a little bit more. Now we've got to retest it. Gotta get to the VWAP. 567. Boom shakalaka. There's a big old candle. Wall Street. Somebody had a fat finger. SPX about to break to 63. I'm at my third resistance now since I recharted it, 5666.82. I think it wants to break the 50 VWAP, but I'm not sure. We got quad witching, so I got that in the back of my head. We have a real volatile day tomorrow. But Powell, he's not bearish. Yay. Let's try to see if this works. Time to do a blood pressure check. Two more hours and 9 minutes left. Yeah, it's better. Do. Hello, Jen. We're retesting the snake again.
So glad you are with us. We're back in the red. You know volatility has been here to stay of late.
Sure has,
so
ma'am.
Back it's worth action in the red now. We'll go over that. On today's show, we'll dive into the latest housing market after the February existing home sales did come in above expectations. Charles Schwab's Jeffrey Kleintop is standing by, and he'll break down the latest action in international markets. And we will take a look at Darden Restaurants after the earnings and strong guidance from that company. In the meantime, we are seeing some pressure on the markets. The weak sectors today would be technology and materials, as well as consumer staples and industrials. So after being in the
market looks flat to me.
S&P down a third of 1%, 56, 57. The Nasdaq down 0.5%. The Dow was down 37 points, and the Russell down 0.5%. Here's a look at oil and gold. Gold moves is at the record highs all week. It's about $7 at 3,048. And oil's at 68.27 the barrel, up over $1. VIX is creeping higher at 20.29. The 10-year bond yield is 4.24%. So it's up off. Earlier today I saw it at 4.21%. But certainly some big moves in bonds, especially a day after we heard from the Fed yesterday, where they said two cuts still for 2025. So for some of the biggest stories in the markets, we welcome in Kevin Hinks, host of Fast Market here on Schwab Network. And I just was saying, right, we heard from, it was a big meeting. Every meeting seems to be a big deal because you're hanging on every word, right? What were some of the takeaways that you thought?
Well, I thought what Jerome Powell did yesterday, Nicole, was make a clear difference between the hard data, the stuff like wages and CPI and PPI, 3 of the 4 key indicators about inflation are all doing better. And then I think he very politely dismissed the sentiment data that we're seeing from University of Michigan and some other places. And he said, he called it an outlier. And he looked at the overall fight against inflation as doing fairly well. And setting up at least 2 rate cuts for this year. One could be as early as June, when the CME Fed Watch Tool is now still over 70%. So I think he gave a much better picture of the U.S. economy in terms of strength, yet improvement against inflation, that the trading world was envisioning. And I think which he is very good at, giving information to the market that the market likes. And I think that's what you saw. Now, today we resume this choppy trade. And what does the choppy trade mean? It means they were up overnight, down about 6 o'clock in the morning Eastern time, when they sold off pretty hard, rallied at the open. Now they're soft again. So if you don't like where the market is, Nicole, right now, just wait a few minutes. It's going to change. These markets are all over the board right now, trying to figure out if the lows are in, and a lot of price discovery going on here, Nicole. So I think these markets are just choppy, and they're very, very tradable.
Yeah, and don't forget, tomorrow is Triple Witch. You're talking about volatility, and tomorrow's going to be some really heavy volume. We have about $4.5 trillion in contracts and stocks that will expire. So that's going to be a big deal, one of the biggest days of the year, I'm sure. That being said, let's turn our attention over to Southwest Airlines. An upgrade over at UBS?
Yeah, exactly. Southwest has been beat up a lot lately for a lot of different reasons. Starting, 2 years ago now, when they ran into the problems over Christmas, and the stock has been under pressure really ever since. Well, we get an upgrade. UBS upgraded Southwest to neutral from sell, with a price target of $36, up from $29. Companies increasingly assertive changes. That's what they're promoting. All the changes that Southwest is making bring the potential for improving financial performance despite the weaker cyclical backdrop facing the airlines currently. And then Melius Research upgraded Southwest to hold also from sell. So what you're seeing, they raised their price target from 28 to 34. What you're seeing here, analysts, good, smart analysts, are taking these recent lows in Southwest and all the changes that they're making and putting out more positive notes, not waiting for the stock to rally $10 and then putting out a positive note. They're doing it now. I applaud analysts who are willing to take a stand and change direction on a name like this. So yeah, Southwest getting 2 upgrades today, both from sell to hold, or to neutral and to hold, by UBS and Melius Research.
Okay, Kevin Hanks, great to see you. Thank you so much. Appreciate it, Kevin. Now let's take a look at the bigger picture. Alan Boomer's with us, Chief Investment Officer, Momentum Advisors. Alan, how are you feeling about the volatility? We were just talking about the back and forth action. We heard from the Fed yesterday. We'll have Triple Witch tomorrow. It's a busy week, no doubt, and you're seeing names like NVIDIA and Tesla on the move. Your thoughts?
Well, for one, I don't like it. No one likes to see all the volatility. We had a really, really swift move towards a bear market.
Don't like
Or
it.
not a bear market, I should say a correction. And that's also kind of unsettling. But it really is in reaction to a lot of changes. We've had a lot of changes in terms of our policies around trade very quickly, and I'm not surprised that the market is reacting the way it has.
So, does it provide some opportunity when things start getting beaten down? Maybe you're looking for value now. How do you go about, I know you have some names to watch here that you like, but how do you go about picking what may work in a portfolio in 2025?
Yeah, for one, I think what I love about markets today is that you really are getting some value from diversification. You look at the U.S. market, yes, it's down. But I look at international markets, they're up. I look at bonds, they're up. And so not everything is down at once. In the U.S. in particular, anything growth related is really taking it on the chin this year. And we've been saying for about the last year and a half that we've got to look beyond just the big, sort of Mag 7 names towards the value side of the ledger. And we definitely see a lot of opportunity with value stocks.
Yeah, understood. What are some of your favorite names there?
Sure. One in particular is Sempra Energy. The ticker's SRE. Sempra's trading at 15 times earnings. You've got a dividend yield that's around 4%. And it's a utility stock. You're making money on electricity, And if you think about what's happening with artificial intelligence, whether it's the less expensive chip used by companies like DeepSeek or NVIDIA's big high octane chips, you still are going to be using a lot of electricity. And I think this is one of those themes that's not going away. I think AI is here to stay, and I think electricity usage is going up. And if I can buy a company that's trading at 15 times earnings, there's not a lot of margin for error. I mean, there's a huge margin for error. Like there's a lot of downside protection kind of baked into me paying such a low price. I mean, 15 times earnings is really, really inexpensive.
Yeah, understood. So you're in the energy space. You mentioned AI. I mean, we'll go to NVIDIA. You like that name. It's been beaten down, that's for sure.
Yeah, I think that, there's other things that I may like a little bit better on the value side, but I still like NVIDIA from the idea that the company is really kind of ground zero for artificial intelligence. I mean, NVIDIA has been an absolute profit machine. It's absolutely earned every dollar of all the price appreciation it's had in the last few years. And I think it still has some more gas in the tank. I think that, this year's been a little rough for all the growth complex, but I do think NVIDIA continues to be a core holding, and it should be for many people.
Yeah, understood. So we went over some of the utilities. You have a tech name there. Raymond James is in there. You do like financials, right? You have
Absolutely.
I see Kinder Morgan. I see, Bank of America goes in there, and that's been beaten down too.
Yeah, I mean, I think there was this view that the banks would do well under Trump 2.0 on the heels of less expected regulation, and so far the banks have not done so well. But you have banks that today you can buy for really, really low valuations. We named two, Bank of America being one, Raymond James. I think, the volatility, like times like now, is when folks really need advice. And that's why, we talk about Raymond James. I mean, it's a company that's trading at an attractive valuation. It's in the advice business, not unlike Schwab, and I think it's something that it's a stock that we continue to like.
Right, understood. And then Uber.
Understood.
That's an interesting one. Where do you think that could be headed?
Yeah, so Uber, it's one of these mainstream, it's become a mainstream thing. I mean, folks are using Uber, they're using Uber Eats. Uber is testing out driver-free vehicles. I just think it's, if you can buy a tech stock, but at a value type of multiple, I think you got to take a look. And so Uber is one of those names that I think has a lot of upside. I could see Uber going 30 or 40% higher in the next 18 months or so.
Wow, that's a big move. I mean, did you feel the same way about Lyft or not necessarily?
I focused more on Uber. I think Uber is really more like the main player in that space. I mean, Lyft is a fine company as well, but we really, we like Uber a bit better.
Yeah, and back to energy, you have Kinder Morgan. They have energy infrastructure. This is a name you think has upside potential. It's at $28 today.
Yeah, Kinder Morgan is the idea, but I think in a world where there's going to be more inflation.
2, 3, 4 might make a little bit more.
Rates on bonds are low and maybe going lower. I think that income becomes super valuable. And the thing I love about master limited partnerships is that they really are an income play. They're not really kind of tied to the price of oil. They're really tied to the usage of oil. And Kinder Morgan is one of these kind of mainstream names that more people should know about. I've been a Kinder Morgan investor for, probably almost 20 years. And, the dividends are really, really strong. It's very consistent with its profit potential, and it's trading at a really attractive valuation.
Yeah, you also have tips in there and gold. So I wanted to make sure I added that in there as areas that you do like. But I do think it's interesting, too, here that we heard from the Fed yesterday. We were just talking a little bit. A lot of folks are focusing on the fact that he did note that inflation's moving higher and GDP's moving lower and 2 cuts ahead. Those were some of the takeaways. How did you feel about yesterday's meeting and the outlook?
Yeah, I mean, I feel sad not sad, but sorry for Jerome Powell. Like, he really is in a tight spot because it's apparent that a lot of the tariffs and policies of the administration are going to be inflationary. When you're concerned about inflation, what do you want to do? You want to raise interest rates to make sure that you can combat that inflation. But we're not in a position where we can do that. Like, we really have to watch for what's happening to jobs and employment. We have to watch for what's happening to GDP and the economy. And so what can you do? You downgrade our economic forecast and you wait. Like, I expected them to sit. But what I'm really watching is just, what are these next numbers? Like, next month we have an inflation print. Next month we have a jobs print. And right now that data is pretty soft, but I am very concerned that inflation data turns, which really puts the Fed in a very, very difficult position.
Yeah, Alan Boomer, Chief Investment Officer, Momentum Advisors. Great to see you, Alan, and thanks for all those names you gave us today. We have to keep an eye on those. Thank you. Coming up, Options Corner. Tom White is standing by. He'll highlight unusual options activity that he's seeing in the day. Investors are looking to trade on some of the recent news from Carnival, Snap, Broadcom. We'll be right back here on the watch list.
Do 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 do. Quad. Witching. Yeah. Do do do.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast.
Change market. Oh, Fifi ain't on here no more. Huh, must have had a name change or... Well. Goodbye. Chipotle's down quite a bit.
you know, there's back and forth. He looked at the consumer sentiment data from University of Michigan before. This time he says, it's only one of the things we look at, but kind of brushed it aside. So
You did.
that level of uncertainty is still out there in equity markets at this point.
I got a big lump in my throat when he said transitory.
Yeah.
I don't know if it was just PTSD from the last
Yeah.
time or just the surprise that he chose to use that word rather than saying short-lived or something else. I could, and I'm not blaming him or not blaming him, but last time he was wrong. So,
well, he was wrong. He was wrong. I think that's the biggest key that people should take away. He was wrong.
He's been
but
wrong.
It wasn't his fault that inflation wasn't transitory because of the fact that the administration at that time was just throwing money left and right and supporting all the spending, which caused more inflation.
yeah, it just showed a plan for plan A and pass A, and then we needed a different plan.
Yeah.
Because plan A didn't really go.
Yeah.
So I think it just was a moment where I was watching that yesterday and, you know, sort of just had
A lot of that money went to politicians.
Carnival, because a lot of the guests that we've been talking to are talking about
That what? 4 trillion out of that 6 trillion went straight to politicians. They got filthy rich.
Rise in a lot of the travel and leisure stocks going into the end of 2024.
And we did not need to spend that money, but we did. And that was a bad thing about it. So I'm waiting here. We're getting close to support here. I'm going to take it off this here trend line. Might start in here soon. These are the 5680s. Get ready. SPX 5680s. About ready. Give me $2. One, two, three. If you can count with me. Right about now. 2.15. Put a tight stop on this right here. There it is. $2. That's what I want. That's what I got. About ready to get 215. Let's see if we got it right. It's a little risky. Got 3, and I'm going to get 3 more. If it dips anymore. Blanket.
What happened?
Snap, SNAP. Could have got one at 56.70. Not looking good. Be right back. No, it's not looking too hot. Dump City. $85. Go to 123 average. I got stuck in that one. Break it. One more green candle, please. to 120. There we go. 130. I'm gonna get out of it because I don't like it. $35, $40. I'm getting out to save my ass on this one. $130. Watch it take off now. There's 130. Come on. I'm out. Huge profit. Well, I got out of it. There's 135 right there. I'd either, if I'd have sold it, I'd have had a $220 loss. Instead, I end up more than that. I was battery sold at 85 cents, 85 bucks, 150. 160. Three white soldiers. Did anybody ever trade quad witching before? Gets pretty volatile. Be a lot of volume tomorrow. I'll definitely play the rebound tomorrow. So you got to be careful in the close. Sometimes I played it, and I didn't start playing it until about, what, 7 years ago? I didn't even know what quad witching was. I was already 14 years into trading, and I had no clue. The guy says, quad witching tomorrow, and I said, what? Never heard of it. Tells you how good of a trader I am.
Programs and the like.
7 for 7 today. Green. That one I had a little over a grand in. So earnings tonight's Nike and FedEx. Let's see if there's anything else that's worthy. Oh, GameStop. I haven't looked at GameStop in a while. See how the little boy's doing on it. GameStop announces release date for March 14th. Well, March 25th. Next week. Well, I tell you, Nike, they're picking it up on their shoes. Tell you the shoe that I want to get. I don't know if it's going to fit my foot. Nike Venero, is that it? 18. Vomero. That was Venero. This one right here. Yeah, I don't know. Just don't seem like my kind of shoe. The Nike. XOM 115. What about OXY? Well, I got 10% on that last trade. Not too much high hopes on General Motors, still too high. What about Snap? We got Snap, we got Shop. Boeing had that big run yesterday, or was it today? Yesterday. I wish I'd have jumped in that one when I called it out. UAL. This one I said was way overbought. Now look how far down it is. They kept pumping it up, 120. I said, God, are you serious? We pulled back though, right to support. Let's redo the fibbies. Yeah, it pulled right back to support. FedEx ought to have good earnings, but I don't know about the future. The guidance, I think, would be a concern about it. I'd rather buy Nike this time. I might just take a chance. No. We could dip down to $70. $70.50. Today after hours. So we got QUBT, quantum computing, after hours. Always claim the editorial retail traders. This is a recorded line, may I help you? Right across from it was Coaches. I was looking at some purses in there. like them. Wasn't sending you a picture of the bras, it's the handbags in front. You got a dirty mind. Snow. There's 56.85s now at 215. Damn it. God. Unbelievable. That'd have been a grand profit right there. Shit. $240. Come on. Damn it. Right back up to the top. We got 2 minutes to power hour. And we're back down at support again. I don't know. Seems like it's not behaving right for me. Three black crows off the 1, 2, 3. So we had three black crows off the 1, 2, 3 at 410. Now I'm going to get out right here. for some reason, the women employees are showing up at 6. And it's still dark on that right side of the building. They've never done that before. Now they have to go back to work. They want to get out early. Since we renovated it, they don't go through the front anymore. Here we go again. Now they're at 7:40. Well, there's your flag out of the snake, symmetrical. Yabba dabba doo. God, I can't believe that, man. Damn. I could have had another $5,000 day again today if I'd held that trade right there. They don't have a key to the front door. They've been off for 5 years. They've been working at home. see my coffee go. Okay.
AI can actually streamline or cut costs or improve your business. Because right now there's still several, I think, culprits that are.
She's just the hardest one to listen to. I've never had an issue listening to the girls before, but man, that one drives me nuts. Okay, we're at the pivot point. It's 10 after 3. Eastern time. Are we going to have a breakout? You got a flag in a flag. 1, 2, 3. Yep.
Through like their lineup of products, and iPhone is most important. iPhone 16, we still don't have a lot of the Apple Intelligence promised yet, which is, I mean, now it's March, that's concerning. You go through the wearables, I think they're losing major traction there, and you go through their AI assistant and they're delaying that product launch for a year. This is a big problem.
Yeah. So the shares not doing, I mean, they're not doing great. They're down 1%. The story on this is pretty consistent. It just that they're behind, they're slow moving, you know, and even when they get it together, you know, it's hard to kind of envision still what big product it's going to be when that's going to be ahead of competitors when so much of this is already out there, usable, and people can use apps, people can go to websites. If you don't have an Apple phone, you've already got it on there. AI quite a bit. Gemini's really good. I use a lot.
I, for the first time in my life, I've considered leaving Apple and going to. Do it! I know, can you imagine? That would be a big shift. But I think you need a type of like, basically mass overhaul with what you're doing as far as like creative direction and sense of like enthusiasm. Like you need like Steve Jobs to come back and start like really whipping the I'd say just really coming
Meta had a good day this morning.
Sort of like creative excellence they once had that I feel like has been lost at the company.
Don't hold your breath on that one.
I know, well, you know.
Tesla's back down again.
To Tim Cook, because I think he's a wonderful leader, but I think they've clearly, based on the news today, had some leadership issues.
At least they're trying to.
Yeah.
You know, okay, symbol, all right, signal rather. Thanks, Jenny, appreciate that. Okay. Apple down 1% right now, Accenture down about 8%. Mark Schechter joins us, CEO of Schechter Investment Advisors. Mark, stocks still looking a little bit listless here with just a little over 1 day left to trade this week. Do you think that we can get some momentum into this weekend?
We've got some since the start of your show, so I think as long as your show keeps going, then the market will keep going.
Yeah, it was the opposite the last couple of weeks. We faded every time the show started.
We'll turn that around.
Tell me about what you're liking right now. Are there clear opportunities, or is there too much lack of certainty? Is there too much cross currents right now?
You know, Oliver, I can tell you what I'm thinking, but I don't have a lot of confidence in what I'm thinking. And we don't make trades to know, for our clients, whether we're going up short term, long term. If we know a long term plan, we set it. We're an investment advisory group, and we help our clients with a long term allocation. And that's what I can shed insight on, more so than any specific sectors or stocks going up or down in the short term.
What do you say to clients who have a long-term thesis that basically is buy and hold stocks, indexed investing, and buy the more the market goes down? There's 2 points that I guess is number one, should they be dollar cost averaging when we're in a correction mode right now?
So I like what you said with this, starting with the long term, but if they are buying as the market is going down, we are focused mostly on buying when their allocation is not where they want it to be.
Okay.
If they started out and they wanted 35% equities, the market has gone down, then I will want to see what's happened to the other assets that they're in. What's happened to their real estate, what's happened to their private equity, what's happened to their private credit. And if they are below that 35% target, we're going to buy equities. If they're above it, we're going to sell equities.
Now, when you talk about allocation, a big part of this, of course, has been the big tech trade slowing down, breaking apart a bit. How do clients feel about the concentration that they were kind of unwillingly put into over the last year as this market was so concentrated in 7 stocks? Does this kind of help diversify it a little bit?
That's a great point. It does, and a lot of times that concentration has caused challenges in selling and triggering taxes. So when we have an over-concentration to any one stock, and we don't want to have that much, to own that much of that stock, we have to come up with some, tax strategies to make it possible to diversify back to the desired allocation.
Well, we got tax season upon us, a month away. What are the vibes? What are people doing? You got some advice?
Tax strategies, yes. We got a lot of concepts, with wealthier families that we help. There's a lot of things related to charity that comes into play, and bunching different donations in certain years. There's certain assets you can purchase and invest in that can trigger depreciation, and there's a lot of tax loss harvesting strategies with direct indexing. That's been really the way we have invested in the public equity markets. We don't believe that managers can outperform specific indices, so we are about low cost passive investing in the public side, and we believe active managers can outperform in the more inefficient asset classes like private equity, private credit, real estate. But we are taking losses all throughout the year by duplicating, the index we want to own. So instead of owning the, ETF or the S&P in total, we might own 290 stocks that replicate what that is, and all 290 stocks didn't go up when the market went up 12%, so we're able to sell off the ones that have gone down and hold the ones that have gone up.
Okay. So that helps answer some of the diversification questions. Sounds like you're not a fan of being parked in market cap weighted indexes more than one needs to be. And obviously every client's different. I'm curious about the alternative stuff that you mentioned there too. Active managers, private equity, is that a bigger part of the portfolio now? And does it compete with bonds or does it compete with stocks?
So the private equity competes more along with stocks, and the private credit competes more with the bonds.
Sure.
And every single client of ours is different. A client might have just come in after selling their business, and they're very nervous about having had exposure, up and down exposure of the market, and they may want to kind of take it easy in some safer, less volatile asset classes, and private credit is a great one for that type of an investor who has been used to the ups and downs of the market, and has the liquidity and doesn't have the concern of not having all their assets completely liquid.
Back to the 200.
Has outperformed public equity by 4% forever, and private credit has outperformed public credit forever. And so really it's about a customized program for each individual. Can they afford some illiquidity that may come with those other non-public asset classes?
Like that, to kind of stick with that point, what does the day-to-day, week-to-week experience look like? What does it look like in those private markets as opposed to stocks? Do you have as much liquidity, or is that not an issue? You kind of generally plan to hold in those positions. Is there any downside in terms of swings or volatility?
No, there are. Typically, you can't go into this unless you've got, comfort that you've got the money you need to spend, because while there are certain ways to access these that might have 90-day liquidity opportunities, they can gate, and you can be left without being able to access your cash, but that's a rare occasion. You've got to be planning for it. So, there are a lot of private equity funds that may have the drawdowns and be out there for 7 to 12 years. There are also some interval funds that have come out and you can access that have that 90-day liquidity. But again, it's only right for the investor who understands it, recognizes it, and can handle it.
Understood. Like the ideas. Got the juices flowing here on how to pump up our portfolios. Thanks, Mark. Appreciate the thoughts.
You got it.
Mark Schechter, CEO of Schechter Investment Advisors, thinking about the alternatives as a bigger portion of the portfolio and trying to dodge some of the heavy, big tech weightings of the indexed world coming up. Let's talk housing. We got a pretty decent number from existing home sales this morning. That seemed to be a nice change of pace from what has generally been a very tricky housing market and largely a negative one for builders. We got the team from Better.com to talk mortgages next.
Download the Schwab Network app and join in on the latest market trends. Anytime, anywhere, on any device for free. Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Boing.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
The economy could use a boost right now, and it hasn't come from housing where things have been mismatched between supply and demand, but we did see existing home sales pick back up again this morning. Vishal Garg joins us, CEO and founder at Better.com. Vishal, thanks for being here.
Oliver, thank you for having me. I'm so pumped to be here.
I love that. You guys have a pretty interesting insight and obviously a pretty clear, direct line into insight for the mortgage market. So just tell me what you're seeing from the top down first.
Yeah, so what we're seeing is consumers are still doing the things that we expect them to do. They're coming online, they're getting pre-approved, and the rate of growth of pre-approvals at the top of our funnel is actually pretty dramatic relative to last year. I think people are seeing a headline rate of 6.5% on a 30-year fixed rate on Better.com today, and they're seeing that and they're saying, you know, affordability, I'd rather find the house that I want to buy I'd rather find the house when housing availability is increasing, supply is increasing, and then I'm going to be able to refinance that later. Let's say, you think that there's a 50% chance that Scott Besson's right and the 10-year comes down, another 50 or 100 basis points. People think that they want to buy the house that they can today, the maximum that they can afford, and know that they're going to be able to refinance later. So we're seeing a lot of top of funnel pre-approval activity.
Interesting. When did that start to kick in?
I think it really started to kick in around like the first week of February, when we started to see the 10-year sort of start to come down. And, for us also, we've enabled Betsy, our AI assistant, to effectively be on. So we've grown her from being 5,000 customer interactions a couple months back in like June of 24. She's now doing over 115,000 customer interactions a month with people who are looking to buy a home. So we're really like pumped, and we think that spring housing season, summer housing season might like positively surprise for people.
Okay, so then to combine these points, did the uptick in applications happen because people maybe who were in the market prior decided this was a better outlook for them, trying to gain the possibility of rates, or you guys have your AI assistant putting stuff in front of people going, hey, this is, a match for you?
Yeah, I mean, right now people are getting online with our AI assistant 24/7, 365 days a year. Don't have to chase a loan officer, and in 6 minutes getting pre-approved and knowing what their rate is, knowing how much house they can afford, easily being able to update the forms and things like that. But so I think that has something to do with it. But the other side of it is I do think that consumers are really looking at rates sort of coming down, and the housing market is picking up, availability is picking up. So I think the confluence of both factors, you just have a different set of audiences also coming into the market. So the average home buyer has now increased in age to being about 56 years old. So now that's a second time, third time home buyer. They're moving for all sorts of different reasons. They might be downsizing, moving to another home. They might be going to the Southeast, moving to Florida, moving to Arizona. And so we're seeing a lot of pickup on an acceleration on that trend that we've been seeing over the past couple of years, and people are like moving, and as a result, they're coming online, and when they come online with Better.com, way lower rates than the competition, almost 50 basis points lower than the competition. So the competition's quoting 7%, we're quoting 6.5%. I think people are finding us, and that's really boosting demand on our side.
Okay, so just I want to come back in a few of those macro points. Give me a lot of good information here. I love it. But just to make sure I understand how far you guys take the client, do you originate the mortgages? How far do you take them in the process?
We take them all the way through. So we originate the mortgages. We've got an investor platform that has got 45 different investors that we match them to, and we're able to effectively then move them on to our investors and off of our balance sheet. So we're a make, originate, sell lender.
Wow. So how much do you keep on the books? None? Or for how long?
We don't keep any on our books, right? It's unique amongst mortgage companies. Almost all the other big mortgage companies, any of the big public ones, they're either holding MSRs, which are mortgage servicing rights, or loans on their books. We are a pure AI-driven platform, and we're intermediating loans, and on an average loan, we're making $7,000 a loan, which is a lot less than even the industry's cost to manufacture. The average mortgage company costs them like $9,500 to manufacture. We're able to undercut them by like 30-50% in terms of revenue, and because we're fully AI enabled, we're still able to like generate positive contribution margin.
Wow. Okay, so take me through then, if it's people who were previous homeowners, that sounds like it connects decently with what we saw from existing home sales, because that was kind of a dead market for a while. People were stuck, they didn't want to move, so maybe if their existing homes pick up, that would be kind of the second or third time buyer starting to shift, which would I guess imply that kind of the younger sub 40 kind of millennial is maybe still a little bit more sluggish right at the moment?
Yeah, so we're seeing the percentage of home buyers that are having issues with debt to income ratios, and
"31 minutes left." So on the daily, we got resistance there. In the choppy, very choppy candles there. Got an inverted hammer. I like that, but I'll wait for tomorrow. It's going to be pretty volatile tomorrow. $56.76. Another $20. Yabba dabba doo.
pans out here. You would have to have a close below around 56.35, 56.34 in order for us to do that. And we brought that up this morning. That was a key area for us to have buyers kind of stepping in, and we did. To the downside here, 5,600 is still going to be the area to hold. And right now we're kind of we're in a consolidation pattern, but the upper wicks, once again, don't look as promising to me for now. But maybe we get some news in order for us to break us higher here. And the news flow over the last 20 minutes has been a little bit difficult as well. I mean, it seems like there's some Microsoft news around declining additional data center capacity from CoreWeave and things of that nature, which I think is a reason why we had that bearish candle just 5 minutes ago.
All right, so we want to avoid, it's what, the shooting star, you said, KG?
Yeah, shooting star. So basically you open, you push above, you have a very long wick to the upside, and then you basically either close below that opening candle, or that opening print, or pretty much right at that opening print.
It's how they pick such a nice term for such a bearish development. I guess the shooting star does kind of fizzle out, which is sort of what we've been doing every time we get above 5,700. Okay, VIX sub 20, volatility somewhat calm.
Yeah, this is March Madness vol. Even though we had this pullback to the downside, there wasn't really a lot of activity in the vol space, just in general. And actually, if you're looking at the S&P 500 options paper, I mean, we actually had some pretty decent paper here today. We're basically sitting pretty much flat on this backwardation. We do have a March quarterly options expiration tomorrow, so be mindful of that. We're going to have AM options settling for the E-mini S&P 500, for the SPX, Russell, NDX. We'll have afternoon options expiring. We'll have a whole bunch of items kind of taking place. We'll also see SPY go ex-dividend overnight as well. So that'll be a lot of transition, a lot of churn in the market. I'm expecting probably a very big volume candle. Usually this is going to be the highest volume day that we have for the month, is usually Friday OPEX, which is the quarterly here. And we do have a little bit of rebalancing taking place, which that rebalancing could actually create some fireworks towards the close, last hour and a half of the session. And if you kind of look at the last 5 years, we've only had one day where we actually were green on March OPEX, but the other days, when you're looking at the red day, they weren't like 1%, 2% down days. They were like 0.5% down days, even though we did see some intraday vol.
Okay, interesting. Well, it's not terribly promising, doesn't sound like, for OPEX.
But On the other side of that is seasonality-wise, usually vol comes down right after options expiration. So that is something to kind of look forward to. Vol coming down should give a little bit more of a better environment for equity markets to kind of push higher. Now, anything can happen, but if you kind of look at the last 15 years, tomorrow is kind of the height of vol, and then we should see a crush of vol Monday, Tuesday of next week. Hopefully the market can rally on that.
Okay. All right, so some nice calendar work there. Appreciate that. What else? Tomorrow, I mean, if we can at least stabilize today, if we don't close at new lows, do you think there's any chance to find appetite for the weekend, or is that just too much to ask? If we didn't rally, Thursday, do we not rally Friday?
Look, we've had some really good intraday moves to the upside. We do have to give some credit there. We are trying to break a bit above that 5,700 level, but we're just not able to do so. If we kind of go back to that morning levels chart where we see the last 4 trading sessions, we are still making higher lows. And so that is also another good thing if you are a bull right now. We're not seeing a full-on trend reversal over the last couple of trading sessions. So that's good. But I would say on the other hand of that, you are seeing some sellers kind of stepping in as well. And so if those sellers continue to kind of get used to being able to chop down these bids, once we cross over 5,700, they'll just put more size out there unless the bulls really come out in full force. And so this is where we are seeing a battle kind of taking place. And we'll see it resolved over the next couple of trading sessions. I'm a firm believer that we won't stay in this range for too much longer here because we talked about that longer term chart. It's kind of like a make or break here, both for the bulls and for the bears. And we're not going to just kind of meander here for the next week or 2 weeks, hopefully. I think we will have a firm direction of where price is going to go. At least a counter trend rally to the upside seems a little bit more promising right now than bears really knocking this down for now.
Yeah, I mean, I think on the margin, we have to describe the next week as the last week as incrementally positive still, even with the rejections of that level multiple times again today, being one of them. Thanks, Kevin Green. Good context stuff, fair analysis. Let's come back into the tech trade for a moment and talk about momentum as we have 20 minutes left. And right now, Meta and Nvidia are the only real strong points in big caps, so it's going to be an uphill battle.
Trading at Schwab is powered by Ameritrade, bringing you futures and forex for round-the-clock market access, even when equities markets are closed. All on our award-winning Thinkorswim platforms. So no matter what or when you want to trade, Schwab has cutting-edge tools, curated education and insights, and trading specialists ready to help, however complex the strategy. With a wider range of opportunities, you can trade brilliantly with Schwab.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
With Schwab investing themes, it's easy to invest in ideas you believe in. Spot a trend in electric vehicles? Have a passion for online gaming? Or want to explore the space economy? Choose from over 40 themes, each with up to 25 stocks identified by our unique algorithm. Buy it as is or customize to align with your goals. All at your fingertips. Schwab investing themes, 40 customizable themes, up to 25 stocks in just a few clicks.
Accelerate your market knowledge
and shift your perspective into full gear. Real-time example trades, a full hour of trading insights.
I'm Tom White.
I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
Let's talk momentum, as big tech has been the problem. Momentum has not been the solution. but some definitions of momentum are different than others. Justin Tam joins us from Craft Technologies, ETF lead at a shop that specializes in trying to find the strongest version of momentum. Justin, good afternoon.
Afternoon. Lovely to be here.
Thank you. Tell us about what you guys are in right now, because I know your funds are pretty active. What should we be piling into right now?
We are. So, firstly, quick introduction to our funds. Craft has free ETFs on the New York Stock Exchange, QRFT, AMOM, which is our momentum fund, and also LQAI. So we employ AI technology, primarily deep learning, in order to find the best combination of stocks for that given month. So in the most recent rebalance in March 1st, we went into NVIDIA, which remained our top holding for a month. And then you're seeing on the screen right there, QRFT, which is a multi-factor large cap ETF. We are taking quite a balanced bet into the Magnificent Seven and mega cap names in the US. And we're still fairly positive on the tech shape, but we're also taking a bit more diversified approach again with sectors such as energy, staples, and utilities, all seeing an increased allocation in March.
How many stocks have you guys got total in QRFT right now?
QRFT has 350 stocks for each month.
Now, is it going beyond the big cap world, or is there a market cap minimum?
So we do focus on the large cap, so we don't invest too much in smaller names. But within that time frame and that function, there's a lot of different parameters and flexibility we give to the model in order for it to make a flexible decision.
As you mentioned, NVIDIA is still a big holding. It seems like all the Mag 7 are still playing an important role, right?
They are, yes. So NVIDIA has been a long-standing holding for QRFT. We picked it first in, I think, September of 2019, when it was trading at around $3.7 US. And it's been, again, a strong holding for us ever since then. Yeah, I mean, we're seeing that QRFT is taking a balance bet among all the mega caps. Maybe that's an indication of its stance on the current market, that it's taking not too much of a bet into a single name.
How much do you like or dislike overlap with the general index, though? Because you're looking pretty similar to the top 10 of the SPY right now, but it seems like a couple financials maybe missing compared to the S&P. You guys have Eli Lilly up there for a top holding, which is different than S&P, but there's a decent amount of overlap right now. Does that stay like that, or do you expect that to shift?
Right. I mean, some of us would argue that it might be a good time to stay closer to the beta in times of market volatility. Sure. But from our perspective, we don't really have specific beta or delta that we assign to the AI models. It does what it does whenever it sees fit. Usually it's fairly active. Again, we have a smaller holding size than the S&P 500. We're more concentrated. And at the moment, yes, it seems like it's fairly close to the market index, but that could be liable to change at every month.
Okay. For AMOM, it was on a roll last year. That's the one where NVIDIA is number one. You've got Wells Fargo in there. GE's pretty interesting up there, too. What are the kind of main characteristics that overlap with these companies? Can you give us some idea what the AI secret sauce is finding in those names?
Right. I guess I'll have to talk a bit about AMOM and how it works. So last year was a great year for AMOM. We did almost 36% in 2024 compared to like roughly 25% for the S&P and NASDAQ. And the way that AMOM works is we take a look at different momentum periods in the last 3 to 75 months, and we pick the periods that we think are the best indicators of the future performance. And for this month's rebalance, we've been decreasing our exposure to tech, actually. So it used to be around 40%. Yes, it was 40% in February. And we took that down to around 26% at the start of March, which has been, working out for us somewhat. And some of the major sectors that are allocated towards would be energy, which is one of the, one of the only sectors that are performing well going into March so far. And in the most recent rebalance, AMOM took the energy allocation up almost 5%, from 2.8% to 7.5% of the total portfolio. And those went to names such as Kinder Morgan, up 3.5% so far this month, and also the Williams Group companies up 3.4% this month. So maybe that's a signal of where the AM momentum model is looking at.
I also see you picked up the weighting for banks as well in AMOM. For the financials, it also looks like a few big cloud companies contributed to your tech weighting reduction. ServiceNow, Shopify, AppLovin. So that's kind of interesting that the AI kind of ditched some of the more cloud-oriented stuff. Essentially, it looks the way it's constructed right now, that you're betting on the market coming back via different names than last year. Essentially, that's what AMOM's bet looks like to me right now when you're underweight tech. You're betting that it's not just like a Mag 7 snapback.
Well, we're betting it this way for March. So
okay, for March,
in April, it might be a completely different outlook.
Fair.
And yeah, I mean, that's one of the benefits that we see in using our data-driven approach, because, with human managers, it's very easy to get stuck into certain thematics or certain biases that, certain trades that work for you in the past. But with AMOM and through FT, it's really a dynamic process. So the outlook could range very highly depending on what the model is thinking for that given month. And that does result in some surprise for us as well, because we don't, there's no human discretion in portfolio management. We don't look at the portfolio and say, oh, I don't think this makes sense, so we're going to take it out. And that approach has given us some pretty surprising names, but also good results in the past. With the NVIDIA pick that I mentioned earlier, where we picked it as early back in 2019. And also for this month, I'll give you an example. For QRFT, we picked Berkshire Hathaway at the start of the month, also performing quite well in March so far.
Well, I like to watch the AMOM in particular because you guys had a great year last year with that, so we'll be watching that. I like the update. You like Meta, Walmart in there, so there are some big tech additions for this month, but it does kind of, I would describe with my human error-prone ways, that it's kind of a little bit more of a value tilt to some degree with the move into banks, with the move into energy. So I think folks who have been betting on those sectors are going to like to hear that. Thanks, Justin.
No worries.
Appreciate the data. Cool stuff. ETF lead at Craft Technologies. All right, it's a little bit of a shift into some of the banks. Energy, as Justin mentioned as well, ditching some of the cloud stuff. When we come back, let's talk bonds. Cooper Howard joins me. And look at that. Oh, no.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 6 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Stocks touched a little green there with the Dow and lost it. Joining me, Cooper Howard's going to shift our focus back over to bonds, Director and Fixed Income Strategist at Schwab's Center for Financial Research. We had a conversation at the top of the show with the CEO of Better.com, a mortgage originator, Cooper, that they're seeing people getting ahead of an expected ability to refinance later this year. What do you think about that?
You know, I think that that's pretty interesting, Oliver, especially given the fact that the Fed projected that they're going to continue to cut interest rates later this year. Now, I think one of the reasons might be just a lot of uncertainty in the markets right now. So I think that's one of the themes that we really saw or heard from Chairman Powell and a lot of the other Fed officials yesterday is just uncertainty of what's going on. So I don't have an exact good reason why people are trying to get ahead of it, but potentially the uncertainty of just what's happening in the markets overall and what potentially could happen with the economy going forward.
Seems like there's some confidence in the air that Jerome Powell is indeed going to be in a position to cut later this year. And we're now up to like 80% for June. Does it seem like they're ready for that based on yesterday's comments to you, Cooper?
You know, I think the big thing that really stuck out to me, Oliver, is just the uncertainty over the outlook. If we look back over the past couple of weeks, just since the new administration has come into office, a lot has changed. So I think looking forward, I think Chairman Powell really reiterated that a lot could potentially change going forward. So they want to take a slow and cautious and measured approach. Our view is that they are going to continue to cut interest rates, Oliver, but the pace at which they cut and the timing in which they cut, I think that obviously is going to be very data dependent. And where the data goes from here, that's really another theme that we've seen play out, that divergence between that soft and that hard data. The soft data, the kind of questions that people are being asked and the surveys that they're being asked, that comes in pretty
Four
weak.
more
We saw
minutes.
that with the University of Michigan number. But then if we look at the
We just
hard
bounced
data,
off
the
of
hard
Head and
data, say,
Shoulders.
like today's jobless claims numbers, or the unemployment claims numbers, excuse me, those are coming in relatively okay. So we're seeing a little bit of a divergence between that soft and that hard data. And I think we'll see which one of those comes to fruition. Does the hard data continue to perform relatively okay? If that's the case, my anticipation would be that the Fed doesn't cut by those 2 times.
Okay. Now, they did, though, cut already without deeply significant economic deterioration. Would you agree with that, Cooper? So is your point then that at this juncture, they're a little bit, we haven't seen enough progress on inflation for them to allow cutting without deeper deterioration?
Yeah, I don't think we've seen enough progress on the inflation front for them to cut at this point. So
Okay.
I think that we would have to see inflation either stall out, or we would have to see inflation move down even lower, or show signs that it's going to be moving lower for them to continue to cut.
What about next week?
Also,
you think PCE looks good? We locked that June in?
I think it's too early to say that we can lock anything in this environment, Oliver. I think the other thing to watch is just a lot of the labor market data. That's the other side of their mandate. We'll see exactly what happens with that. Labor market continues to perform okay, but if we see some deterioration there, then yes, I would anticipate that would strengthen the case for a rate cut.
Okay. The number next week, do you think it does carry some weight, though? If the market stays under pressure and then PCE misses, he's going to make some people unhappy if he doesn't cut, I feel, Cooper.
You know, it always is going to carry some weight. I mean, it's inflation, given the environment that we've been in recently, to where concerns over inflation are very heightened. Yes, PCE is going to carry some a big importance, especially since that's the Fed's preferred metric to watch for inflation. So yes, I think that it's going to be an important one, but a lot of the metrics that have flowed into inflation or flowed into PCE, we do have a little bit of a sense of where it's headed going forward.
Okay. Cooper, lastly, the data this week was pretty solid, right? Just to come back to that point, we stopped missing our data. The economic surprise rate is starting to inch higher now.
Yeah, the data has come in pretty solid. But I think the big theme of this week was what the Fed projected and really what the Fed said. We saw today 10-year yield continued to trade lower in terms of the yield on it. But really what reversed that course were the housing numbers. So that again goes back to that hard data coming in better than expected or holding up all right.
Okay. Appreciate it. As always, Mr. Howard, thanks for the thoughts.
Thanks, Oliver.
Cooper's Director of Fixed Income Strategist at the Schwab Center for Financial Research. Coming up, the bell. Dow 10 basis points. We're going to talk some earnings, a couple interesting ones. For all the housing discussion, we'll keep a close eye on Lennar, and Micron offers some tech news for us, perhaps 1 minute away.
What's up, Carl Nation? It's your #1 broker with the best full-service wealth management skills.
Yep. So we had a snake with a flag on it. A lot of flags broke out at the end of the day as a Chop City into quad witching, which is tomorrow. So I can't see what happened. Wait for tomorrow. We'll probably just hit a bottom and start to bounce up. I was 7 for 7 today. That last trade, not the last one, but the one before where I got in and it nosedived on me from 2 to 85 cents, and I bought the dip and got out with $100. I could have got out with $1,000, and I barely had 1,100 in the trade, so that's the way it goes sometimes. But again, if I'd have sold it, I'd have took a loss, and I didn't want to do that, so I added on. And about 99 out of 100 times when I do that, I come out green instead of the 99 times where I'm down and I don't add on, I'm red. So that's that. And I'm going to get on out of here and warm up my phalanges and watch some videos and get caught up on the news. I don't pay much attention to the news when I'm in here, and I like to know my news before I come in the next day and trade. Gives me kind of a clear image of how I'm going to trade that next day. So, can't wait for it to start to warm up. Today it's 49. I mean, our winters here are like 6 months out of the year. I'm getting to where I can't stand it anymore. And then when it starts to warm up, it's rainy and hot and then humid, and it goes by so fast. I love warm weather. I'm not into the cold anymore like I was when I was younger. So, yabba dabba do. I hope everybody had a good day today. If you're ever in doubt, private message me and I'll try to help you. I try to average 6 to 7 to 8 trades a day and not try to overdo it. Kind of wait for my supports to happen. Day into close, played off this head and shoulders 3 different times. Scored pretty good on that. I got in this triple bottom right here, and that's where I got screwed up. I thought I had me a little bottom here, a little symmetrical flag out of that snake, and it ended up dipping on down, and then it come back up, so I don't know. That's what got me today. All the other ones were very successful. I didn't have to cost average down hardly anything today, but that last trade right here. Like if I jump in a trade and it's at $1 and it just happens to drop to 90 cents, I'm going to add on to it. If it drops down, because it's just more profit in my wallet. And that's about it. I don't go hog wild when I take my first trade. I go in small. And then if it does dip a little bit, I'll add on. And that's how I do it. And it comes out, brings my little average down a little bit. You can never guess perfect timing on these trades. Some can, I guess, but You got to be real, real good to do that. I usually dip a little bit, and then I just add. As long as I keep it under 1,500 a trade, that's my limit. Everybody's got to have a limit when you're trading. You know, you don't want to. Mine's less than 3% of my account. It's always been like that, 5%, 10%. I know guys that will go 100%, and some of them are multimillionaires right now when they first started trading. They just go all the way in, and some of them lose their account 2 or 3 different times, and then finally learn the hard way. But I've never put over 10% in any trade, 5%. And very seldom, for 4 or 5 years, 3 or 4 years, I didn't have to throw in 3 or 4 grand on a trade, because you know they just kept going up and up and up. But we're in a different period right now where there's a lot more volatility, and you just got to be aware of that. It's a hard time, you know, but it's also some of the biggest profitable times to be trading right now. I mean, I'm averaging over 1,000 a day, and then some days are 3 to 4, and some days could have been 50 or 60. That's how big, and that's with less than $1,500 in a trade. You buy it at $3 and it runs up to $3 grand, and you got 5 contracts, and you go, wow. And you sell it because you're up already. You know, you're up 100%. Then it ends up running 1,000. And that's where we are right now. We're at that spot where, you know, you get in at like when I call the bottoms every day. Today, you know, I left probably a couple grand on the table, 3 or 4 grand, especially that last one. That really shook me up. I was in it at $2 and it dipped to 85, and I added 6 more at 85 cents. And then it runs up to 240, and I'm going, shit. So that's about it. Wish everybody a great day. Great room. Everybody's kind of sharing their ideas in here. Teaching each other how to trade, and that's the way it should be. I'll catch y'all later.